Nvidia founder and CEO Jensen Huang, fresh off the conference call. Jensen, welcome. Thank you so much for being with us.
I'm happy to be here. Nice to see you guys.
You too. I want to start with Blackwell, which is your next generation chip. It's shipping this year, you said on the call. You also said on the call, we will see a lot of Blackwell revenue this year. So if we're looking at about $28 billion in revenue in the current quarter, and Blackwell is a more expensive product than Hopper, the chip series out now, what does that imply about revenue in the fourth quarter and for the full year?
Well, it should be significant. Yeah, Blackwell, and as you know, we guide one quarter at a time. And but what I could tell you about Blackwell is this: this is a giant leap in AI, and it was designed for trillion parameter AI models. And this is, as you know, we're already at 2 trillion parameters. Model sizes are growing, about doubling every 6 months. And the amount of processing between the size of the model, the amount of data is growing 4 times. And so the ability for these data centers to keep up with these large models really depends on the technology that we bring to them. And so the Blackwell is designed also for incredibly fast inferencing. And inference used to be about recognition of things, but now inferencing, as you know, is about generation of information, generative AI. And so whenever you're talking to ChatGPT and it's generating information for you or drawing a picture for you or recognizing something and then drawing something for you, that generation is a brand new inferencing technology, is really, really complicated and requires a lot of performance. And so Blackwell is designed for large models, for generative AI, and we designed it to fit into any data center. And so it's air-cooled, liquid-cooled, x86, or this new revolutionary processor we designed called Grace Blackwell Superchip, and then supports InfiniBand data centers like we used to, but we also now support a brand new type of data center, Ethernet. We're going to bring AI to Ethernet data centers. So the number of ways that you could deploy Blackwell is way, way higher than Hopper generation. So I'm excited about that.
I want to talk about the inferencing, Jensen. You know, some analysts have brought up the idea that as we move over towards inferencing from the training, that there may be some in-house companies, processors from companies, those made from Microsoft, Google, Amazon, may be more suited for the actual inferencing. I guess, how does that impact NVIDIA then?
Well, inferencing used to be easy. You know, when people started talking about inference, generative AI didn't exist. And now generative AI is of course, is about prediction, but it's about prediction of the next token or prediction of the next pixel or prediction of the next frame. And all of that is complicated. And generative AI is also used for understanding in order to generate the content properly, you have to understand the context and what is called memory. And so now the memory size is incredibly large, and you have to have context memory. You have to be able to generate the next token really, really fast. It takes a whole lot of tokens to make an image, it takes a ton of tokens to make a video, and it takes a lot of tokens to be able to reason about a particular task so that it can make a plan. And so the generative AI era really made inference 1,000,000 times more complicated. And as you know, the number of chips that were intended for inference kind of fell by the wayside, and now people are talking about building new chips. You know, the versatility of NVIDIA's architecture makes it possible for people to continue to innovate and create these amazing new AIs, and then now Blackwell's coming.
So in other words, you think you still have a competitive advantage even as the market sort of shifts to inferencing?
We have a great position in inference because inference is just a really complicated problem, you know, and the software stack is complicated. The type of models that people use is complicated. There's so many different types. It's just going to be a giant market opportunity for us. The vast majority of the world's inferencing today, as people are experiencing in their data centers and on the web, vast majority of the inferencing today is done on NVIDIA. And so I expect that to continue.
You said on the call a couple of times that you'll be supply constrained for both Hopper and then Blackwell chips well until next year because of the vast demand that's out there. What can you do about that? Are there any sort of levers you can pull to help increase supply?
Hopper demand grew throughout this quarter after we announced Blackwell. And so that kind of tells you how much demand there is out there. People want to deploy these data centers right now. They want to put our GPUs to work right now and start making money and start saving money. And so that demand is just so strong. It's really important to take a step back and realize that what we build is not a GPU chip. We call it Blackwell and we call it GPU, but we're really building AI factories. These AI factories have CPUs and GPUs and really complicated memory. The systems are really complicated. It's connected by NVLink. There's an NVLink switch. There's InfiniBand switches, InfiniBand NICs, and then now we have Ethernet switches and Ethernet NICs. And all of this connected together with this incredibly complicated spine called NVLink. And then the amount of software that it takes to build all this and run all this is incredible. And so these AI factories are essentially what we build. We build it as a holistic unit, as a holistic architecture and platform, but then we disaggregate it so that our partners could take it and put it into data centers of any kind. And every single cloud has slightly different architectures and different stacks, and our stacks and our architecture can now deeply integrate into theirs, but everybody's a little different. So we build it as an AI factory. We then disaggregate it so that everybody can have AI factories. This is just an incredible thing, and we do this at very high volume. It's just very, very hard to do. And so every component, every part of our data center is the most complex computer the world's ever made, and so it's sensible that almost everything is constrained.
Jensen, I want to ask about the cloud providers versus the other industries that you said are getting into the generative AI game or getting NVIDIA chips. You had mentioned that in comments in the actual release, and then we heard from CFO Colette Kress that 40%, mid 40% of data center revenue comes from those cloud providers. As we start to see these other industries open up, what does that mean for NVIDIA? Will the cloud providers kind of shrink, I guess, their share, and then will these other industries pick up where those cloud providers were?
I expect them both to grow. A couple of different areas, of course, the consumer internet service providers. This last quarter, of course, big stories from Meta, the incredible scale that Mark is investing in. Llama 2 was a breakthrough. Llama 3 was even more amazing. They're creating models that are activating large language model and generative AI work all over the world. And so the work that Meta is doing is really, really important. You also saw Elon talking about the incredible infrastructure that he's building. And one of the things that's really revolutionary about the version 12 of Tesla's full self-driving is that it's an end-to-end generative model. And it learns from watching videos, surround video, and it learns about how to drive end-to-end and using generative AI, predict the path and the how to steer how to understand and how to steer the car. And so the technology is really revolutionary, and the work that they're doing is incredible. So I gave you two examples. A startup company that we work with called Recursion has built up a supercomputer for generating molecules, understanding proteins and generating molecules for drug discovery. The list goes on. I mean, we can go on all afternoon, and just so many different areas of people who are now recognizing that we now have software and AI model that can understand and learn almost any language. The language of English, of course, but the language of images and video and chemicals and protein and even physics, and to be able to generate almost anything. And so it's basically like machine translation. And that capability is now being deployed at scale in so many different industries.
Jensen, just one more quick last question. I'm glad you talked about the auto business and what you're seeing there. You mentioned that automotive is now the largest enterprise vertical within data center. You talked about the Tesla business, but what is that all about? Is it self-driving among other automakers too? Are there other functions that automakers are using within data center? Help us understand that a little bit better.
Well, Tesla is far ahead in self-driving cars. But every single car someday will have to have autonomous capability. It's safer, it's more convenient, it's more fun to drive. And in order to do that, it is now very well known, very well understood that learning from video directly is the most effective way to train these models. We used to train based on images that are labeled. We would say, this is a car, this is a car, this is a sign, this is a road, and we would label that manually. It's incredible. And now we just put video right into the car and let the car figure it out by itself. And this technology is very similar to the technology of large language models, but it requires just an enormous training facility. And the reason for that is because the data rate of video, the amount of data of video is so high. Well, the same approach that's used for learning physics, the physical world, from videos that is used for self-driving cars is essentially the same AI technology used for grounding large language models to understand the world of physics. So technologies that are like Sora, which is just incredible, and other technologies, VO from Google, incredible. The ability to generate video that makes sense, that are conditioned by human prompt, that needs to learn from video. And so the next generation of AIs need to be grounded in physical AI, needs to understand the physical world. And the best way to teach these AIs how the physical world behaves is through video, just watching tons and tons and tons of video. And so the combination of this multimodality training capability is going to really require a lot of computing demand in the years to come.
We put out our trends report, the tech team at Stifel yesterday, and top 10 trends. We do this every year, and really it was about AI, not surprisingly, but it was more about the broadening of AI. Last year it was a lot about Nvidia and GPU clusters and this massive dollars being spent by the cloud service providers on building out training networks. But when you look past that, AI servers, AI PCs, there's a lot of AI innovation and applications coming behind, right? And when we looked at all the companies that could potentially benefit, guess what? Nvidia ticks all the boxes, right? So Nvidia is still playing in the clusters, we think. There's still going to be an investment cycle continuing for AI training clusters. But when you look beyond that, we do think that if you think about AI servers that are going to be doing the next step of AI, so we're training last year, training this year, then inference, where are we going to make the money, where the ROI is going to come from? And Nvidia ticks those boxes. So we think it's going to be a good year. Numbers went up massively last year, but there are different layers of Nvidia's AI strategy. You've got the chips, the hardware, which is the biggest piece, but then there's networking behind it that networks all these clusters together. And probably the most important piece that I think investors really will start thinking about this year is software. And Nvidia came up with a software stack, CUDA, that is the ecosystem of AI right now. And if you look at Apple and iOS, the way we're thinking about it is if you can win the developer, you're going to win the hardware. And so I think that's what the next stage of the NVIDIA story for this year is going to be.
This is an exclusive reporting from Reuters. Basically, they say that they've spoken to some folks and that NVIDIA is moving into the custom chip space. Now, let me just kind of break down what that would mean. NVIDIA currently sells its H100, its high-end chip, to big cloud companies, AI companies, things like that. That is basically, think of it as like a Lamborghini, right? It's probably priced alongside a Lamborghini. It's meant to be this, massive machine that's capable of doing tons and tons of processes constantly, simultaneously, right? So that's the beauty of the GPU. The problem is, like a Lamborghini, it eats through energy. So a lot of companies, Microsoft, Amazon, Meta, Alphabet, they're building their own custom chips. They're called ASICs. And essentially what they are is just specified chips designed for specific needs. So you have these larger chips that NVIDIA has, and they're kind of all-purpose for GPUs and AI, whereas ASICs might meet a specific need for, that's different for Microsoft, that's different for Meta. Those companies are increasingly looking at those, they're increasingly using those, and the fear is, at least for NVIDIA, that will eventually eat into their market share as well as their total addressable market, right? Because if you have a company that's building its own chips
and they're specified for their needs, then why do they have to go and buy the Lamborghinis that NVIDIA offers? So now it looks like NVIDIA is trying to work with these companies and say, hey, we can do that too. And we can do it better than what you guys can do because we already did the big stuff on the Lamborghini side of things.
Antoine Chkaiban, who is New Street Research Technology Infrastructure Analyst. Antoine, what do you make of these numbers as we just get them? It looks like a beat here, but not sort of the astonishing beats, perhaps, that we have had in some recent quarters.
Yes, thanks, Julie, for having me. So NVIDIA just printed 4Q top line up 22% sequentially. That's 8% above sell-side consensus expectations and on top line, with data center revenues 27% above, and guided 1Q top line 9% sequentially, 8% above consensus expectations. And the stock has been moving a lot after market. This clearly illustrates that buy-side expectations were above sell-side. And also remember that this has to be put in context of a very strong acceleration in the past couple of quarters. NVIDIA's top line had already grown 2.5x in 3Q compared to 1Q, as companies like Microsoft and Meta accelerate the deployment of their AI infrastructure.
What are the estimates out there for how big this could eventually be?
But if we take a step back on all this, global spending on data center AI chips tripled in 2023. From 15 billion to 45 billion, and is now set to double again to 90 billion in 2024. And if we look out a few years, late last year, Lisa Su, CEO of AMD, pitched a target addressable market for data center AI chips of 400 billion in 2027. And so now we just need to think about the future along two axes. Either it materializes in a healthy and sustainable way, or we fall short of this prediction with disappointments, overinvestments, and lower returns.
To me, it looks like a beat across the board. I mean, the big numbers I was focusing on was data center in terms of revenues. They beat that handily. And then, of course, that upcoming first quarter of 25 revenue number, I think the street was a little over 21 billion. They came in over 24 billion. So again, it really, there is very hard to find any flaws in this report. You know, Josh, coming into this, I was worried that maybe even if they beat on the fourth quarter and guided ahead on the first quarter of 25, it still wouldn't be enough. So I'm encouraged that they are reacting positively to stock. You know, we had a big sell-off, as you know, coming to this report. A lot of it was related to the Palo Alto Networks warning that we got last night. That kind of rolled into the NVIDIA number and NVIDIA stock price. But it appears that, you know, we're getting some clear thought here on going forward with NVIDIA, and it looks all positive.
Just one thing I wanted to draw our viewers' attention to that I've noticed in the CFO commentary from Colette Kress over at NVIDIA. She mentioned that data center sales to China declined significantly in the fourth quarter due to U.S. government licensing requirements. Now, that's not a surprise, right? We know that NVIDIA is trying to figure out some workarounds for China. But Antoine, I'll take this question back to you. How much of an obstacle still is China, and do you expect China to continue to be? Will it get worse?
So I think in the guidance actually for the quarter that NVIDIA just reported, there were no data center revenues. NVIDIA guided for very minimal data center revenues this quarter. And the way we see things playing out going forward is that demand is so strong everywhere in the world that chips that would have been allocated to China can definitely be reallocated to other countries to demand elsewhere. So we don't really see that weighting much on data center growth going forward.
And Dan, I want to bring you back here as well. I should mention, Dan, we kind of think of NVIDIA now as kind of an AI proxy, so maybe it's no surprise here, Dan. I'm looking at a few different names here moving higher, maybe in sympathy, Supermicro, AMD, ARM, Palantir, moving higher here in the after hours as well. One question I had for you, Dan, was on the question of competition. You know, in Gen AI, Silicon, when you think of competition, I guess I'll double barrel for you, Dan. One, what are, in your opinion, NVIDIA's kind of competitive advantages? And two, who you think poses the greatest competitive risk? Is it AMD, Intel, or another player?
Yeah, Josh, so I think we have to think of NVIDIA as kind of first to market in AI. I mean, they have been talking about on their conference calls and their product calls for over 5 years about the fact that they are dominant in this space. And then all of a sudden, it came to fruition about a year ago on this quarter when they had the big blowout quarter. So they've got that lead post in terms of ahead of a lot of the competition. But you're right, Josh. I mean, I've done a lot of work in kind of putting together tables and so forth of what are some of these competing chips. I mean, you have AMD, which you mentioned. They have the MI300X, MI300A, which they have rolling out right now in that space. You also have Intel with Falcon Shores, Gaudi 3, which is another chip that's going to be coming out the next year or two. You look at Marvell Technologies, their PAM4 DSP processor is also in that space. But there's no doubt that NVIDIA has that lead ahead of a lot of these other companies who are just now starting to roll out competing AI chips. So because of that, they'll probably stay in the lead. But think about this, Josh. The average AI chip that NVIDIA sells, we don't know the exact price, but some of them are like $20,000 or $30,000 a piece. So you kind of wonder if like an AMD, who's kind of known as being a lower priced chip maker, especially in the CPU area against Intel, or let's say in the data server space, would they come in to try to introduce a cheaper chip that maybe people would be willing to go with? So that's where I kind of see the door maybe opening up for maybe an AMD or some other competing company like a Marvell or something like that.
The momentum for the AI boom still remains well intact. So let's break it all down. We want to bring in Dan Ives, Wedbush Securities Managing Director and Senior Equity Analyst. We've also got Paul Meeks, Harvest Portfolio Management Co-CIO. It's great to have both of you. Dan, let me start with you. I have your note pulled up right in front of me. You called this a game changer moment for tech bulls and AI revolution. What does this tell us just about the momentum that's behind AI investment right now and what that's going to do not only for NVIDIA, the leader within this space, but what it means for many of its rivals out there as well?
Yeah, I mean, look, the godfather of AI, Jensen, NVIDIA spoke, and this is going to fuel the rest of this tech ecosystem from the hyperscale players, Microsoft, you look at Google, Amazon, and others. And I believe this is a start, going back to the fall, of a new tech bull market. It's a Taylor Swift moment for tech bulls. And this is something where it's get out the popcorn, the bears go back deep into hibernation mode. You look at capex, the big tech's the strong getting stronger. I mean, when you look at Microsoft, they're still in acceleration mode. So that's just not a worry for at least the next 12, 15, 18 months. And remember, you haven't even had the consumer piece start to come in. That's why I believe it's a 1995 moment. Paul hit on it, the infrastructure. Right now, I think the big focus, second, third, fourth derivatives. The godfather spoke. Who else benefits? That's why I believe this AI party is just getting started.
Dan, just to follow up on that, what does the consumer pick up? What does that early adoption need to look like in some of the core hardware and devices that this is going to play a huge role within and perhaps be lighter fluid for the way that we even engage with technology that's at our fingertips or in the workplace?
Well, Brad, right now it's all about enterprise. I mean, that's the golden goose for the next, call it 12, 18 months from an actual growth perspective. The consumer, that's what Meta's looking at. We believe Apple, that's what they ultimately unveiled, WWDC. You look at how Google's going to play this. That's going to be a 2025, 2026, which speaks what Paul said. I mean, this is just the beginning of this AI revolution.
I expect NVIDIA and its partners to continue to add capacity in the months and quarters ahead. If we think about what's going on here, NVIDIA's solutions are empowering others, for example, cloud companies, to expand their business, create new revenue streams, and ultimately grow. And so this broader story about NVIDIA's platform, its ecosystem with millions of developers, remains vibrant. I think we'll see good growth through the rest of this year into next year as supply continues to come online.
Dan, there are already concerns about the valuation of this particular stock going into earnings. Now, right behind Apple as well as Microsoft. Given the numbers that we got yesterday, does the valuation match where the company is? You see it pushing even higher.
We think the stock remains attractive here. If we think about the next couple of years, driven by the product cycles, NVIDIA should generate significant free cash flow, and that free cash flow will continue to grow in our view. And so when we look at the valuation in that context relative to the growth prospects, I think the stock remains attractive here. To be sure, these businesses are cyclical. There are, of course, product cycles, macro cross currents, but the underlying drivers of the business remain healthy in our view. And I think we'll learn more at the company's GTC conference next month about the product roadmap, which helps lay the foundation for additional growth.
And to that point, because you would think that the idea is that in that 10-year cycle that Jensen Huang was talking about, some of these costs should be expected to come down. How do you then gel that with what we might see in terms of the product roadmap, as well as how they plan on executing as you see other companies coming in trying to really get on board, especially Intel here, and really try and have some competition here?
I think competition in this market will remain fierce. The key for NVIDIA is to continually drive value for their customers in new areas. So as they bring out, for example, their new architecture for the data center likely to be introduced next month, the performance, the capabilities, the features are going to enable NVIDIA's customers to add value in their businesses. Think about areas like drug discovery, fraud detection, climate change, really the re-architecting of the industrial landscape as you marry the physical and the digital. And so the growth and the use cases, I think, remain attractive.
Well, NVIDIA's GTC conference starts Monday. So what better way to get prepared than with a few facts about the company and its CEO, Jensen Huang, that you might not already know. First, have you ever wondered where the company's name came from? Well, it started with the letters N and V. That's what the three co-founders would label all their documents to signify next version. Eventually, the company was ready to have a name, so the three looked for words out there using those two letters. They found the Latin word for envy and then named their company NVIDIA. And when it came to label the first graphic processing unit, NVIDIA held a Name That Chip contest in 1999. 12,000 users sent in names, and eventually GeForce was selected. 7 users received the GPU for participating there. And after that, NVIDIA's stock continued to move higher, most notably as we think about going forward from here, what this means for the naming of future products, what the company does with different contests, I don't know, but that's one way they engaged users very early on.
It is one way to engage users. It's also a great way to keep people very interested within your company. You mentioned the fact that the stock really started to take off. Well, once the stock hit $100 per share for the first time, Jensen Huang actually got a tattoo designed around the company's logo. Talking about going all in.
Tatted.
On your company logo. And it's paying off right now.
He should have to get a new tattoo every time they eclipse a new $100 marker and the stock goes up by that increment.
A lot of tattoos. He'd have full sleeve, depending on how large those tattoos are.
Especially considering the splits. Well, anyway, passion for chips runs in the family. Jensen Huang's children currently work at NVIDIA. And get this, Lisa Su, AMD CEO, is Jensen Huang's first cousin once removed. Invite me to the barbecue, folks. I'm just trying to slide through. I'll bring some good food.
It was like a rock concert. It was unbelievable just to see the level of excitement there. And I went to GTCs a long time ago. And let me tell you, the mood was not the same as it was yesterday. So clearly they do have this incredible momentum. And yeah, I do think they delivered on what they promised. And I'll even add one extra thing to what Dan had brought up in terms of important things. Not entirely sure how the market's reacting. Maybe some of this was already baked in. But look, at the end of the day, this next generation Blackwell architecture sets the stage for them to stay ahead of the competition. And arguably, it was the first one designed and released in the generative AI era. While previous NVIDIA chips, of course, are being used for generative AI, they were actually built prior to the explosion of all this. This one kind of was built in that time era. The other big takeaway, and this is a big strategic move long-term for NVIDIA, like Dan mentioned for Groot, is software in general. They unveiled something called NIMS, NVIDIA Inference Microservices. Very technical thing, but it's these little containerized applets that companies can use to put together Gen AI applications. And importantly, of course, it's based on NVIDIA's CUDA, which is this software layer that's been the sticky part of this whole system. So the thing about NIMS is that companies can make the process of building Gen AI apps, which, by the way, is still really hard, much easier, thereby allowing more companies to do this. And oh, by the way, along the way, NVIDIA becomes more of a software company, in addition to being a chip company with new revenue sources from that software.
How much more difficult does it become for not just NVIDIA, but for the rest of the potential benefactors in this environment to now show Wall Street, to show investors that it can actually deliver on some of these promises?
Well, look, Brian, that's a great question. And that's why I mentioned this NIM software and another concept they called AI Foundry. And the AI Foundry is this idea of being able to build for people like a foundry, a chip foundry, but this is a software foundry, these applications. Because, yeah, look, the excitement's been out there. Now it's about, hey, we need to deliver this. And we've seen the potential, we've seen proof of concepts, but how do we get regular companies to be able to build this stuff? They don't have all the data scientists they need to be able to pull some of this stuff off. So how do we make the process easier? And that is what a lot of this software work that NVIDIA is doing is working on. And, and on the hardware side, the other thing to remember, like, look, when you're 90% of the market and you're way ahead of everybody, you're basically competing with yourself. That's what they're doing right now, is they're competing with themselves, pushing themselves forward. And, I think they did a good job with Blackwell. There's a lot of interesting things about the architecture that they've done, like I said, that are kind of built in this era of Gen AI applications. And they made some tweaks to allow performance improvements at a big level, and also important energy efficiency improvements, which also is going to help them in the long run.
Bob, how critical is it for other tech players when you see the reaction in a name like Dell here this morning after Jensen Huang touted the fact that he said, quote, nobody is better at building end-to-end systems of very large scale for the enterprise than Dell. We're also seeing reaction in SAP this morning. How critical is it for other tech players to be using NVIDIA's platform at this stage in the AI cycle?
Well, I think they all think it's incredibly valuable and important. I mean, I have never seen more partner announcements at an event, I think, in my life. I mean, everybody and their brother wanted to be associated with NVIDIA. And that's what we saw. We saw all the major cloud providers, all the server makers, Dell, of course, being called out, but there's also HPE, there's Lenovo, there's Supermicro, there's these other companies who are also going to be building stuff with these parts, all these software companies, Ansys, Cadence, all kinds of big companies who are building software based on this, because they see where the market is going. They see, in fact, that NVIDIA is in the lead. So, of course, they want to associate themselves. And that's why there was just this incredible array, as I said, of different partner announcements, because they want to do that. Now, we're also going to see a lot of competitors, right? AMD is going to get in here, and this market is going to continue to grow. And even if NVIDIA loses share, which is kind of hard not to do when you have that much, the market is going to still grow so much that there's still growth opportunity for NVIDIA.
Are there any clear answers that are coming forth from this conference about how this company is going to service into China, where there's already even more between the US and China of the kind of tit for tat that's continuing to play out, which puts a bit of a dampener on the opportunities in that region?
No, it absolutely does, Brad. And I don't see an easy answer. I mean, this is a difficult problem that I think all tech industries all tech companies are going to face. People like NVIDIA and AMD and Qualcomm and Intel in particular, producing, very highly performant chips. They're the ones who are obviously being restricted more already. And so, yes, that is a bit of a damper on the business. So they are all working on developing chips specifically for the China market that can, still provide some capabilities. China says they want to do all their own, but they are years and years behind the most advanced technologies. So, it's going to be a very interesting situation to watch. Again, I think longer term, what NVIDIA tried to do at this particular show is show to the world, hey, we're going to build these amazing chips and we're going to make them better and better. But hey, check out this software stuff, because we're going to be doing it too. We're going to start charging on a per hour basis, or per GPU per hour, to use some of these services. Again, that's really interesting. Revenue there, obviously almost nothing right now, but what's the opportunity?
We're here with NVIDIA VP of Automotive, Danny Shapiro. Danny, thank you so much for joining us here at GTC 2024. Kind of a huge event. This particular one, first time in 5 years that you guys are live, but also because of all of the AI hype going around. I guess, just to get things started, has the AI hype that we've seen around NVIDIA trickled into the different
businesses? How has it impacted the automotive side of things?
Absolutely. We're seeing this amazing development going on throughout all aspects of the auto industry. One of the things we're focused on is AI supercomputing in the car. So creating an AI brain for automated and autonomous driving. So we just announced a new platform called Blackwell at the keynote yesterday. This is going to really help in the form of generative AI. The kinds of things that ChatGPT is doing, being able to take data streams in and other data streams being generated, whether it's text to text or text to image, text to video, or video to text. I mean, so it doesn't really matter what it is. And so we're seeing that kind of technology helping transform what will go inside vehicles, whether it's cars or trucks or robo-taxis, being able to have a natural conversation with your vehicle. But also it's really helping the development of autonomous vehicles as well. So in generative AI can be used to assist simulation for testing and validating autonomous vehicles. Imagine an automated car and there's cameras on it that are understanding the environment. Well, what we can do is generative AI can take that video feed and understand it, communicate it to you in real time, and alert you to the fact that maybe somebody is jaywalking, or there's a baby stroller being pushed across the street here, or a motorcycle that's coming in your blind spot. So the cameras won't just create a beep, but actually could tell you what's going on.
So I guess, how far away is that? We're still, ChatGPT was what, 2022? So it seems still pretty early, right? How far away is that, and how long has NVIDIA been thinking about that kind of technology in the car?
So we've been focused on in-vehicle experiences for more than a decade, and we really pioneered bringing kind of consumer electronics experience into the cockpit. Touch screens, digital instrument clusters, rear seat entertainment. And the last several years now, we've been bringing artificial intelligence to that as well. So having a concierge that you could interact with, convenience and safety features, all built around AI. So being able to understand what's going on outside as well as inside, who's in the vehicle, what's their agenda, where are they going, what do they want to do, and merging all of that together. So what's nice now is that these large language models are really enabling new experiences. And instead of having to learn specific commands for your car, you could speak to your car in natural language.
So I guess this is something that is now kind of coming to fruition. And during the keynote, Jensen had mentioned a number of new deals with automakers. I guess, can you just give us a sense of what those mean? Some of them, BYD as well as a few others. And where do you see those kinds of deals going?
So BYD is really exciting. They're the world's largest EV maker. And so they're going to be using Drive Thor. So that's our new AI supercomputer for the car. It's automotive grade, meaning it's designed to work at all temperatures. Unlike your phone, which won't work in the cold or the heat, our Drive computer will work under all conditions. And so that becomes the AI brain for their future fleets of cars. But BYD is also using NVIDIA AI for training the self-driving. How do you teach the self-driving cars? So their data centers have NVIDIA inside. They're using NVIDIA for simulation for their factories, to be able to plan the factories using NVIDIA Omniverse. So that's our digital twin technology. NVIDIA Isaac Sim, so this is a robotics stack as well. So how are these robots going to build the cars? Well, they're using NVIDIA artificial intelligence as well in the factory, and even retail. So we can use Omniverse, which again is the digital twin technology. We take a model of the car that the designers used, and with generative AI, we can put that model anywhere. We can envision it on the highway, on a country road, by the beach, in your driveway. So the retail experience and dynamic car configurators will be something that will transform going to the dealership or just buying a car online or on your mobile device.
And just one last question. Where do you see this kind of technology going for NVIDIA in the year ahead, 2 years from now?
Yeah, the explosive growth of AI is quite astounding. But we're just getting started. That's the exciting thing. These vehicles that we're making, it's not like it's a fixed vehicle and just ships. but it's a living entity now. There's a supercomputer on board, and we can update the software on the car so it can get better and better over time. So when you buy the car, it'll be at its most basic level the day that you drive it home, and it will just get better with new software updates over time.
Big news out of Nvidia's GTC conference in San Jose. CEO Jensen Huang unveiling the company's next generation Blackwell AI chip, as well as new partnerships with software giants. And news it is bringing its Omniverse enterprise technology to Apple's Vision Pro headset. Joining us now on all this news, someone who attended the keynote. There you go. You got that selfie, Ray. Ray Wang is Constellation Research founder and principal analyst. Always got to get that selfie, Ray. Look, this is a stock. When we're talking about Nvidia, that is up about 75% year to date. We're seeing it down today about 2%. Is that just a matter of a little profit taking on the back or sell the news situation?
Kiko, you're definitely right. They are taking some profit taking, some money off the table. I think a lot of the news was being hyped up all the way into the conference, and I think that's where the stock price was there. But I think we learned a lot of things at the conference, and I think the most important piece is that NVIDIA is no longer just a chip company. If you look at all their extensions, they're focused on the next layer, which is really that getting that chip extended out into the ecosystem, and then of course focusing on software, which is really important for them going forward.
Yeah, we'll talk about that software part in just a minute, but this is a stock that still largely trades on that potential, or not even potential, just the demand coming through from their GPUs. The Blackwell chip here, B200 yesterday, that was unveiled, largely expected, but give me your first impression here about how this elevates NVIDIA's offering and really what this means for AI overall.
Well, they did three things that were very important. One, they had backward compatibility, which means if you have your old H100 chip, you can swap it out onto Blackwell. The second thing they did was they built a Lego type architecture that says you can tie all these GPUs together. And so it's almost like, we can turn like 10 GPUs into one big giant GPU. You can take 1,000 GPUs, turn it into one big giant GPU and pull those resources. And then I think the third thing we learned is this Blackwell platform actually achieves what we call Jensen's law, not Moore's law anymore, the ability to double 1,000 times compute every 8 years. That's actually an incredible thing when you think about what's required to take AI to the next level.
Yeah, I mean, it's so hard I was trying to wrap my head around what exactly that means today, Ray, given how far we've already come, right? How does this stack up against the competition? Yes, NVIDIA is still far out ahead, but AMD as well as Intel really trying at least to make inroads here.
So there are a couple things happening. I mean, if you look at the chip making ecosystem, there were some partnerships that were announced with Cadence, Ansys, Synopsys. So how you layer the chips, how you put the chips together, how you design them, and of course, how you manufacture the chips with TSMC. They're taking advantage of TMC's 3-nanometer technology, and more importantly, the ability to actually bring these chips together and package them in the right way. These are some of the most advanced chip making technologies that are out there, and there's nothing like it to be seen. And so the question is whether AMD or Intel or other chip manufacturers can catch up, or will people come up with an alternative to GPUs to be able to solve the same set of problems? I think the latter is what we're going to be looking for to say, is there something that will challenge the dominance of the GPU, and will it come in a different package?
You talk about the software part of it. I mean, this is NVIDIA sort of hinting at investors. We're not just about chip making here. We did see them launch a cloud service for researchers to be able to test out NVIDIA's quantum computing software. In the grand scheme of things, how big of a revenue driver is the software side likely to be for NVIDIA?
In the long term, the software side will probably be bigger than the chip part of the business. But when I mean long term, think 5 to 7 years out. When the creation of the internet, right, was out there, I mean, we all thought the infrastructure companies were going to win, right? We're like, AOL, they're going to be up there, right? You're talking about all these other companies, like, hey, what's going to happen with Verizon and the telco business? But it turned out companies that actually built business models on the internet as a distribution channel, they're the ones that actually succeeded. It's kind of like the story that people talk about in the refrigeration business when people were building out refrigerators. It's like refrigerator manufacturers are going to be the top companies, but the company that won out was Coca-Cola. So it's companies that can actually build software on top of these new ecosystems. These are the ones that can actually build and make AI come to life.
Yeah, long term, then certainly something investors are going to be focused on. Going back to Ray, the Blackwell platform here, the Hopper line, which is the one that preceded it, we're talking about $30,000 to $40,000 per chip. What's the pricing that you're looking at for Blackwell specifically, where you think it would allow NVIDIA to maintain at least the revenue momentum that we have seen?
Well, they haven't announced pricing, but I think most people expect it to be slightly more expensive than the existing chipsets, and because of the modularity and because of the reverse compatibility that's there. So there hasn't been a lot of information about the pricing capabilities of what they're doing, but I think the important piece is just to understand that the architecture is backward compatible, which means people will keep their H100 chips and then they'll upgrade to Blackwell or different components of Blackwell. You could see all the different combinations that you could do to combine what was happening on a Hopper chip and a Blackwell platform, and that was really the idea to say, this is not a one-way street. It actually works back both ways, and you can actually connect existing legacy architecture with this, and all the software will work the same in CUDA as well.
Yeah, I think investors would have expected to see a knockout blow, and what I think NVIDIA brought to the surface was very compelling. Particularly, they're embracing and extending on the platform, but there's just a lot more analysis that needs to go on. For instance, this new chip, this new platform comes out the end of the year. It's being compared to a product that AMD that's actually shipping now. So I think what people are trying to wrap their heads around is, what can we expect from AMD? What can we expect from Intel? And how does this line up? I think they're also comparing the recent run-up that, quite frankly, is in the stratosphere. And I think what's already baked in is businesses that NVIDIA might not already command and conquer, like the CPU market. So I think there's analysis going on.
And Patrick, one piece of analysis I want to get your take on is just talk about price here for a second, because maybe a bit of confusion here, Patrick. So chips in the Hopper line, they go for somewhere between 30,000 and 40,000, Patrick. And it seemed like CEO Jensen Huang on another network today was suggesting, okay, Blackwell chips are going to be maybe in a similar range, but then apparently clarified that comment, Patrick, said prices are going to vary. Any more color or insight you can tell us about price here, Patrick, and what that would mean for margins looking ahead?
Yeah, so this new chip is actually two chips stitched together in a very good way, and the size of the chip will be larger, hence their cost will be more. I do believe the new line will be more expensive than the previous line, but what the company's going to do is they're going to keep both of these chips out there at the same time, right? If you need, essentially, it's a good, better, best strategy with the best being Blackwell and the better being Hopper. So both of them will be in the market. I can't imagine Blackwell not being more costly, because it could be up to 2x the cost.
And Patrick, based on what you've been hearing so far, you mentioned some of those rivals. Do you think this fundamentally changes NVIDIA's position?
So NVIDIA has close to 100% of the training, and I would say 95% of the inference for these latest models. I can't imagine them maintaining that market share, but the market is growing so much. This market could be 2-3 times the size of the current market in 2 years. So NVIDIA can continue to have let's call it a 90% market share position, right, down from 98%. That still gives AMD and Intel and NVIDIA all room to grow.
It was interesting, Patrick, when you kind of listened to Jensen Huang yesterday on his keynote. I think he was, clearly trying to emphasize this point that, we're not just a chip company. We're software. We're networking. We're an ecosystem. That was kind of the theme, the storyline. How important is that for investors?
I think it's incredibly important, right? I like to say there's companies that show up with a bag of parts, and there's those that show up with a platform or a solution. And essentially what NVIDIA is doing is, you're right, they have the core accelerator, They have the networking that not only pulls the chips together on a single card, but also connects those cards together. And then they have the networking that connects the racks together. And you layer on top of that the drivers, the containers, the platform services that put them in a position where, let's say somebody does come out and has a better chip, NVIDIA is still competitive on a platform very similar to Apple, who hasn't had the best devices for a while, but they do so well because their platform play is so strong and their experience is so strong.
Patrick, what about potential supply issues? Do you think NVIDIA can produce enough chips to meet this demand?
So a little bit of a tricky question. I think there is fear amongst their customers. I mean, they love what NVIDIA is doing in terms of market making, but they do fear being connected to one company for supply chain risk. And to have a competitive supply chain, you have to have 3 players. So I think that with AMD and NVIDIA leveraging the same wafer manufacturer, and that's TSMC, and even for packaging, there's similar risk between the 2 companies. Intel is interesting in that they could make NVIDIA wafers and do the packaging. I do believe there's a deal at hand. So it's a maybe. Part of it is the growth, but also the outside world, the customer base is feeling about being locked into one supplier.
Patrick, I'm going to get you out of here on this. I'm interested to get your take on what the long-term risks are for NVIDIA, Patrick. And you know, I don't mean just over the next 6 months or 12 months, but over the next few years, Patrick, what would you argue the big risks are? Is it competition? Is it demand holding up from those big tech customers? Is it just technology evolving in some way that proves a challenge? What would you list?
I would say the biggest risk is researchers now not figuring out the next big thing that requires bigger and faster chips from NVIDIA. The second risk would be competitive risk based on customers' desire to not be beholden to one company. There are some ancillary risks in that the top 3-4 hyperscalers out there, Google, Meta, AWS, and Microsoft are all working on their own chips. And with the workload moving from training to inference, that could be a risk. So yeah, there are risks for sure.
So let's start broadly. Just tell us what NVIDIA is, how long it's been around, and what exactly they do.
Yeah, this is dedicated to my dad, who probably thinks that NVIDIA is some kind of, I don't know, laxative or something like that. I don't know. Anyway, so NVIDIA was founded in 1993 with the basic goal of running graphics processors, right? So the processors that would power PC video games. They eventually started working with the likes of Microsoft and Sony. They credit themselves with creating the first graphics processing unit. And so they really were basically meant for gaming. And I think the idea that they are in AI now has to do with 2 major milestones. There was one in 2006 when they released their CUDA software. It's basically a software that allows developers to take a GPU and let it run general processing. So you would have a CPU, your central processing unit, what we usually call the brains of the computer, doing the general processing normally. A GPU, though, allows for what's called parallel processing. So rather than in a CPU, you have a certain number of lanes that are doing tasks. On a GPU, you can have far more lanes running the same data at the same time or data at the same time so that you're able to complete tasks much faster. So that goes into this whole AI thing. In 2012, a pair of researchers, including one future executive board member at OpenAI, they were able to use NVIDIA GPUs to form neural networks, AI neural networks, and find a picture of a cat or pull up a picture of a cat. And so identify a picture of a cat. And so from there, NVIDIA was like, okay, well, this seems really good. Right. Why don't we start investing in this? And so they started going whole hog into this. And at that point, everyone thought that Jensen Huang, the CEO, was a madman. You have all this money that you're making billions of dollars on video games. Just stick to what you know, man.
Sure.
And so they ended up pouring money into this, and lo and behold, ChatGPT hits. OpenAI with blows up, and now all these companies are just clamoring to get these chips.
So it's not just NVIDIA alone out there, we got to remember. Who are some of their biggest competitors?
Yeah, I mean, some of the big competitors are really the names that you already know and love, or maybe don't love, I don't know. Intel and AMD. AMD is probably its biggest competitor, and it has been for years. They used to have they have a graphics card arm as well as a CPU arm. So they're basically fighting NVIDIA and Intel at the exact same time in different spaces. But the idea is that they have a new chip called the MI series, the MI300 series. And so they say that can compete with NVIDIA's chips. Intel has its Gaudi series, its Gaudi 3 chip, says it can compete with NVIDIA's chips, but they don't account for NVIDIA's new Blackwell chip. So Intel and AMD, they were focused on NVIDIA's Hopper series of chips, the H100, the H200. There's a lot of numbers and letters. But basically what it means is NVIDIA had a chip, everybody was gunning for it. Right. They got close or next to it, but then NVIDIA said, hold my beer, I'm going to go ahead and come out with an even better one. So these companies are trying. It's also their customers. Their customers are building chips now. Right. So Google, Microsoft wants to build it. They're not there. Amazon. So they're all trying to get into this to try to beat NVIDIA in some way.
Just lastly, we had mentioned the stock price over the past 52 weeks. How has NVIDIA actually been performing as of late? We think about this year to date and what investors should expect going forward.
Year to date, they're up 70%. Over the last 12 months, they're over 200%. They make everything else look like it's just standing still. Even Meta, which jumped massively after they announced that dividend and that share buyback plan, they went gangbusters. I think they went up 20% on the day when that was announced, but makes them look absolutely ridiculous. NVIDIA just absolutely dominating. And just quickly to put a point on how good they're doing as far as revenue goes. In their last quarter, they had $22.1 billion in revenue. That was up from $6.1 billion in the same quarter the prior year. And their full year revenue last year was $27 billion. So in last quarter, they nearly hit all of the revenue for the prior year. And we're expecting them to obviously have another bang out quarter. I think the problem comes when you start lapping this, right? This explosive growth doesn't last. People are going to say, well, where's my 300% growth or whatever? And, it's law of large numbers, people. So, yeah.
I just want to set up a little bit first why NVIDIA is so important. Remember, this is a chip-making giant. It makes so-called GPU, graphics processing units, that have become really integral to this explosion in generative AI and the data processing that is needed to train AI models and then power them as they operate. This has meant that NVIDIA has really climbed in importance in weighting in the S&P 500. It is now the third largest company by market weight in market cap in that index, and it's a market-weighted index. So the third biggest stock in the S&P 500 behind Microsoft and Apple. NVIDIA now $2.3 trillion in market value. You see here Alphabet and Amazon are even smaller when you look at that market cap weighting. And how did it get here? Well, if you look at the charts for the company here is take a look at the NASDAQ 100 year to date of the various stocks. And NVIDIA, if you look at the year to date chart for this company, it's up almost 90%. This is after it's 240% climb last year. So it just keeps going up and up and up. That means that it's gotten to that market cap level where it is today. And to look at it another way here, the market cap over time, which has just sort of exploded in the past few years. It's exploded alongside the revenue growth for the company. Going to back up just a bit to see if we can find that revenue chart. There is that revenue chart here. So you see the enormous growth that we have had in that revenue over the past few years in the triple digits after sort of hovering at the same level for 21, 22. What is so extraordinary about this, to just put a fine point on it, is companies, when they get this large, it is very rare, if not unprecedented, for them to grow at this level. To just give one example here, John Vin over at KeyBank expects that data center revenue alone for Nvidia will reach $200 billion in calendar 2025. That will be a 321% gain from 2023. So a more than 300% gain in just 2 years to $200 billion. Just to sort of compare it to what we have seen from other companies, usually companies that grow at that rate in terms of sales are very young companies. Tesla, for example, back in 2013, it grew revenue by 387%, but its revenue was just over $2 billion. Compare that again with just the data center revenue of $200 billion expected for this company. Just a few years ago, yes, Nvidia was known for AI, but it was mostly known for graphics chips for video games and also for crypto miners. And in fact, it was the company of the year back in 2016 here at Yahoo Finance. I wasn't even aware of that. I wasn't here in 2016. And, back in 2016, here's the revenue right around there. So it's pretty fascinating how much it has grown, even as it is so large.
No, it's a great result. Expectations were high because they keep setting them higher, and they still exceeded them, both for this quarter and their guidance for the next quarter. But it shouldn't be too surprising. Their customers told us they were going to spend more. Microsoft, Amazon, Google, Meta told us they were going to spend more on GPUs. They told us they're buying any GPU Nvidia will sell them, and that should continue for the rest of the year. Those companies were very clear about the fact that they're in an arms race. They're in a land grab to have as much generative AI capacity right now as they can buy. And that bodes well, not just for this quarter next, but for the rest of the year for Nvidia, because they have all that demand lined up.
And Gil, just looking ahead now, if you're an Nvidia investor, you're excited. New GPU platform, Blackwell on the way. What is that going to mean for the company, for its business, financials?
Well, so the innovation at Nvidia is accelerated. They're now introducing a new product set every year, and they have to, because competition is now building products that are more and more comparable to what Nvidia does. And importantly, those customers that I listed are all building their own chips. They're all saying that inferencing will increasingly be done on their chips, whether in a data center or on a device. And that's what you have to start thinking about for next year and the year after that, is that their customers at some point are going to have enough NVIDIA GPUs, A, because they'll have enough data center capacity, and B, because they're going to be putting their own chips in the data center. So those are the things to look out for as you get past this year. But a lot of this stuff is not going to happen this year. Those companies told us so.
And Gil, most of your colleagues on the street, Gil, 90% telling me I should buy NVIDIA. You don't. You say, you're neutral. You just mentioned some of the potential challenges ahead. Are those why you're on the sidelines, Gil, or is it an evaluation call here?
No, that's exactly why, because I have the street low number out of 50-something numbers for 2026. I actually think that the revenue growth for 2026 will be negative, where most of the estimates are for pretty substantial growth into next year and the year after that. To us, what I just said in terms of their own customers competing with them, their own customers reaching a point of saturation at some point, means that there's going to be a point next year where revenue starts declining sequentially. When that happens, the estimates are going to have to go down very substantially. Hard to recommend a stock when you expect that to happen as soon as next year.
So when you talk to clients, though, Gil, they ask you, okay, what are some upside risks to that call? What do you tell them?
That if applications start catching on at a faster rate, if we get more and more killer applications that depend on data center GPU capacity, then NVIDIA will be able to keep ramping for the next few years because those large customers will need more and more capacity. We haven't seen that yet. We have some great, interesting, promising applications out there, but none that have caught on, none that are commercially viable beyond testing, experimentation, and hope. Until we see some of those applications generating real substantial demand for Microsoft, Amazon, Google's customers, there's not a lot of reason to think that they'll have to continue to ramp up their data center spend into next year and the year after that.
And so, Gil, I am interested, if valuation isn't attractive here, if it's not supportive in your opinion, what is fair value, Gil, in your opinion?
Well, it's a tough situation, right? Because what I'm describing is next quarter is going to be great. The quarter after that's going to be great. And they're only trading at relatively comparable multiples to historical levels. So valuation, if you believe NVIDIA will continue to grow into next year and the year after that, valuation is not unreasonable. If you believe, as we do, the 2026 results will have sequential decline and the business will converge toward more of a run rate, then valuation actually could end up being very, very high right now.
NVIDIA shares up over 2,000% in the last 5 years. When our next guest first got the stock in May 2020, it was just $70 a share. So this is a happy guest that we've got here joining us now to discuss NVIDIA's explosive growth story. We've got Dan Morgan. He is Synovus Trust's Vice President and Senior Portfolio Manager. Dan, congrats on what is obviously great trade for you, getting in at $70 for this name. I'm curious, what do you think the runway looks like from here? Obviously, you've had a stellar growth story for NVIDIA thus far. How high do you think this could go?
Well, you mentioned in the beginning of the hour here about all the concerns coming into this upcoming print, especially related to some reports that came out that potentially said, certain customers were not purchasing the Hopper series chips. They were going to hold off into the Blackwell, which is the new GPU that was introduced back in March, that was most likely going to come out in the fall. But you look at these numbers, it's not really indicative of that, right? We had data center segment, which was up 427%. They did 22.6 billion, which is an unbelievable number. And then the guidance that they gave for this upcoming second quarter consensus was at about 26.5 billion. They guided at 28 billion plus or minus 2%. So that gives me an indication that there is no slowdown in terms of order growth going into this upcoming quarter or the past quarter in regards to, let's say, holding off on buying the Hopper series in favor of the Blackwell series that's going to be coming out in the fall. So I think that put to bed that concern, at least for now. And of course, the stock has responded on the 10-for-1 stock split and all the other good news, and we're moving at higher levels right now. So very good report across the board.
Dude, when it comes to Blackwell production, something that obviously was asked about in the earnings call, and just Jensen saying that Blackwell right now is in full production. Talk to us just about exactly what that means and how quickly you think NVIDIA will be able to scale that production.
Well, that's a good question. And a lot of the indications that we have shown they've already built out the supply chain for Blackwell. So they're already preparing for companies like Amazon, Microsoft, you mentioned in the beginning, Meta, they're all building out these huge data center. They want to use those AI chips. So they're preparing for that. There's a lot of news flashing around. I've heard October that they could start bringing out the Blackwell chip. Other people have said December, definitely in that calendar year, fourth quarter. But there's going to be delays. I mean, right now, the Hopper 100, which is their key AI chip, has about a 10-week delay between ordering and actually delivering. So I'm sure there'll be a massive influx in the fourth quarter of customers who want to upgrade, especially to the Grace Blackwell 200, which is supposedly the fastest chip that they create. There will be people that are willing to pay for that. It goes for about $70,000 estimated cost. But I think right now they're preparing and getting that supply chain ready to go so that they can meet that demand in the fourth quarter. But there's going to be lag times. There's lag times even today with their current Hopper series.
Well, I mentioned this in the intro, Dan, the market share that NVIDIA has around chips, about 80%. I know you got a lot of chips players in your portfolio here. Which one do you think has the highest likelihood of biting into that market share from NVIDIA?
I wrote a research report about that. We looked at the competition in the space, and it's kind of interesting because you have really two sides. You have companies like Intel with Falcon Shores and Gotti. They have chips that are coming out next year. You have AMD with their MI300A, MI300X. They're just starting to ship that. But what's interesting, guys, is that you have the companies who actually buy the chips. Meta has their own MTIA chip. You have Graviton and Trinanium, which is being produced by Amazon. You've got Google, who has the Tensor Flow series chip. So you have the companies that actually buy NVIDIA chips creating their own organic chips that could potentially impact their demand for NVIDIA chips. And then you've got the companies like AMD, Intel, Marvel is in that group. Broadcom is slightly, but they don't produce directly chips. They make mostly accelerators. But if you look at that group, those would be the three to focus on: Marvel, AMD, Intel, and then whether we'll see a slowdown in demand from their customers producing their own homegrown chip, so to speak.
We're looking at how to navigate the future of AI with the Yahoo Finance Playbook. To discuss, Ben Beharan, CEO and Principal Analyst at Creative Strategies, and Paul Meeks, Co-CIO at Harvest Portfolio Management and partner at Wall Street Beats. Thanks, guys, for being here. Really appreciate it. Ben, I want to start with you. What Jensen was sort of referring to there, and there has been some questioning from the analyst investor community about this move from training to inference, right? From when AI models are learning stuff to when they're doing stuff, right? When they're analyzing and forecasting, and whether NVIDIA chips would be best poised for that, especially given their cost. Did this quarter and forecast put that to bed, or do we still have questions about the future growth rate?
Yeah, I mean, I don't think it put it to bed, right? This is a highly competitive market. You've got Intel, AMD, you've got the hyperscalers doing their own inference chips and AI accelerators. So clearly there's a battle for these workloads. I think that's the best way to really think about it. That said, I think the argument that he's making is really that the NVIDIA systems, right? And it's not just GPUs, it's the whole systems. It's the CPUs that are on board, it's the networking, it's the memory, it's everything that they build is going to be the best total cost of ownership for these workloads. And so there's good argument for that. I think you can make that case. I really don't think we know the answers to that yet, but I do think this is becoming the most interesting thing to track, which is one, what are those workloads that are inferencing? You know, we want NVIDIA to give us more details of that. And then secondarily, does that number continue to grow each quarter, and that they do run more inferencing workloads on their DGX systems?
And Paul, let's bring you in here as well and kind of start big picture here, Paul. Interested just to get your take on that NVIDIA print. You know, they reported they beat, Paul. Investors love it. What did you make of the report, Paul? And what did it teach you kind of about the bigger, broader AI theme and trade?
Well, the thing that I was looking for was not any metric in particular financially. It was tell me the vision and make me feel more comfortable coming out of the conference call that there is a longer runway for NVIDIA in all kinds of facets of AI infrastructure build than we thought. Because the issue with NVIDIA is, with the stock up 3-4-fold last year, doubled already this year, is do they ever run into a growth wall? Because if they do, only 2 fiscal years ago, this company only earned a couple dollars per share. Then it goes to $28 this year, probably $35 to $40 next year. But if they actually see at some point, and I'm not saying when, any sort of slowdown in spending, the stock used to be much lower because its earnings power was 3, not 45 or 50. So that is the absolute key. And I think Jensen Huang did a nice job yesterday articulating the vision. Only he can do that to make us feel that they've got their bases covered and they're not going to peak, just as Ben said, necessarily with large language model building.
Well, and the interesting thing is, even if spending doesn't go down, if it doesn't keep up at the same rate, and it doesn't look like it necessarily is going to, at least if you look at the revenue projections, then NVIDIA might not be in the same position. Ben, as you said, there's a lot of competition out there. So does that mean investors at this point, is it too early to look to the competition to invest, or to look to the bigger ecosystem to invest?
Yeah, I think this is where the work's really got to come in to really understand where these workloads are going to go. You know, looking at where a lot of big businesses and enterprises are going to want to run their workloads either in the cloud or on-prem. And I do believe there's something to this AI factories, sovereign AI, that's going to happen. But does that mean that's totally NVIDIA systems? I think that's still an open question. It's really going to come down to cost, right? We know that running inference is a big part of the workload, and one of the most important important parts about inference. And what you need to do technically is you need to be able to handle, millions upon millions of people at the same time querying and getting predictive response and doing all the AI things that we talk about. And so can every other product handle those concurrent inference workloads? Jensen brought this up on the call. It's something that we hear regularly as people are exploring where to put those workloads in the cloud. So I do think that there's an argument to be made for NVIDIA, but again, as we said, right, there's a huge set of competition out there. And this inference point is the sole reason why Google's doing TPUs, Microsoft's doing Maya, which is their accelerator, and why Amazon has Inferentia, their inference engine, is they're doing it to build these workloads for those. So it's very competitive, but I just don't think we have an answer to where all these workloads are going to go yet.
Well, the AI trade flexing some muscle today as part of its quarterly performance report. NVIDIA also announcing its latest 10-for-1 stock split. Here with me now, we've got Jay Woods, Freedom Capital Markets Chief Global Strategist. Jay, great to see you in the building here.
Great to be here.
I mean, what a time to be alive. We're sitting here talking about a company that used to be the darling for crypto traders out there and a bunch of gamers. Now, it's got friends in every corner of the world here, and they just announced this 10-for-1 stock split. Does it become more appealing after an announcement like that?
Well, if you own it, and I got calls from parents and from friends I put in the stock.
Oh, yeah?
They feel like they won something. Like, hey, I've got 10 more shares.
And they beat the split.
They did. This is their 5th split since 2000. First since 2021, 4-for-1 stock split. And what it means for the retail investors, it's cheaper to get in. If you own it, you're going to have 10 times more shares. The value is the same, but it does feel great when you own a stock that splits. What it also could mean, it could get added to the indexes. The Dow Jones Industrial Average is price weighted, not market cap. So maybe we saw Amazon go in after a 20-for-1 stock split, kicked out Walgreens Boots Alliance. I would be, not a conspiracy theorist. I think it's real to think maybe Intel, your time has come, 20 years in the Dow, Cisco, and Nvidia, it's more relevant. And given that, the data centers and the expansive growth we continue to see, it would be fitting to be in the Dow, and now it's more price advantageous to do so.
Yeah, one of the huge things that we think about is the bellwether that NVIDIA has really been for the sentiment in the markets. How long can that be the case?
It can be the case for a long time. I mean, you have Dan Ives on the show all the time, and he talks about early innings, 1995 moment, and I happen to agree with him. Their growth trajectory, let's just put it in perspective. This quarter, they made $26 billion in revenue. In 2022, it was $27 billion. So in one quarter, they matched what was a weak year, a down year, but the growth continues to rise. 600% year over year net income, 500% year over year EPS. 5 years ago, it was a $100 billion company. Now it's $2.5 trillion. And then you look at who their customers are. They're the biggest companies in the world. The Amazon, the Alphabet, the Microsofts of the world. So their story continues to grow, and it grows exponentially. So is it early innings? I say maybe the third, but it's a stock that you need to be in because it's so central to the growing tech story that we're in now.
Jay, I'm going to play this clip for our viewers here who maybe weren't able to tune into Morning Brief when we were speaking with John Vinh about his own outlook and what some of the catalysts are for the stock right now. I know you don't have an IFB. I'll break it down for you in a hot second here. Let's play this for the viewers real quick.
I think there's still very favorable risk reward on NVIDIA here. We think that they can do close to $50 in earnings, and at that sort of earnings power, NVIDIA is trading very attractively relative to its broader peers, right? Kind of in the high teens, low 20s multiple, which is very attractive from a valuation perspective from our point of view.
All right, so John's saying $50 in earnings we could see NVIDIA eventually get to. What would need to happen? What would they need to continue to get right in order to hit that mark?
Well, they're on the trajectory right now. They just have to keep doing what they're doing. They could be head-ons with Taiwan. I know people are worried if there's a conflict between China and Taiwan. And Jensen has said, and I think he said it to Julie in that great interview before, that is the epicenter of their world. So if there's a rattle there, then possibly. But no, the data center exponential growth is tremendous. Their partnership with continued partners are great. And then the competition, they may nip at their heels, but they're not really making a dent. And the Blackwell chip. He already announced that, and then the chip that's going to replace that down the road. So their innovation continues to be 1-2 steps ahead of the competition. So the multiples are justified, and that PE ratio, you go back to .com. People like to compare this to the .com bubble.
Yeah.
Maybe it's the beginning of a bubble, but they're the leader of the bubble. It's these AI companies that come later and IPOs that come later that will signify the bubble. They continue to lead. I think the valuation is justified, and it's going to grow for some time to come.
And so on the other side of this, there has to be outflows from other places in the market if investors are going to pile in to this crowded trade that already has been Nvidia. Where is the biggest risk, perhaps, elsewhere in the market if investors do say, you know what, this is where I'm reallocating some of my portfolio exposure
Well,
to?
what we've seen over the last 18 months is a big rotation.
Yeah.
If you think about Nvidia right now, it hadn't broken out to new highs. It's been kind of stagnant for the last 2 months. We had utilities lead, we had financials lead. So I continue to see a rotation. The Dow Jones Industrial Average has 25 of its members, 30 members, down right now. But Nvidia is going strong. The SMH, the semiconductors are going strong. So we're seeing a rotation literally right now where they're diversifying some portfolio going into Nvidia, and then Nvidia is number 3 in the QQQs, number 3 in the S&P 500. So people own it in their indexes, and the XLK, the technology ETF, it was only 4.5% coming into today. I believe that will go up. So people will own it, but what we're seeing, this is a secular bull market. Nvidia is now leading the race again, but it goes up and it pauses, and then something else comes along. I think this is great rotation in a bull market with Nvidia being the leader.
Is it a name that you need to own outright, or that you need to perhaps have as an ETF or within a basket of other securities?
Well, if you own it outright, yes, it's a name you want to be in, but you don't have to put all of your eggs in that one basket. The SMH, the Van Eck Semiconductor Fund, is a diversified basket of chip makers. If you think Nvidia is going to lose some of that, moxie to its competition, then you buy the semiconductor index. The NASDAQ 100 has the Magnificent 7. That's another great place to be in. And then you have smaller ETFs, not as liquid, a BOTS, BOTZ, and a Metaverse, and METV, that have Nvidia as one of its components and have different aspects of AI plays within them. So there are other ways to diversify and own Nvidia, but if you own the stock, hold on to it. If it grows to be too much of your portfolio as it continues to climb, then you sell it off and you buy something a little cheaper, a little safer. But for those in it, congratulations. You feel like you won with a 10-for-1 stock split.
Well, no surprise, like we've been talking about, Wall Street is bullish on Nvidia's results. A number of analysts boosting their price targets on the stock this morning, including our next guest, raising his price target on the back of those results from $1,200 to $1,300 a share. We have John Vinh, he's KeyBank Capital Markets equity research analyst, joining us here. And John, just your first take on the quarter and whether or not this was exactly what the street wanted to hear at this point in the story.
Yeah, I believe that they came through in flying colors. I think the expectations kind of met kind of the whispered buy-side expectations right now. I would say that right now, going into earnings, obviously, as you had mentioned earlier, there was a little bit some consternation of maybe a demand pause ahead of the ramp of Blackwell. So the expectations weren't sky high, but certainly I think they certainly met the bar there.
Met the bar, and as we're taking a look at shares right now, pre-market, they're up by about 7%. The question continues to be, how do they build on top of this success, John? What do they need to continue to show the street?
Yeah, so I see a couple of kind of key catalysts in terms of their financial performances. In the second half, they're going to start ramping their next generation Blackwell GPUs. B100 is going to be the majority of the volume. The ASPs on those GPUs are going to be 40% higher. There's obviously also a lot more capacity coming online. CoWoS has been previously kind of a bottleneck. There's going to be a lot more supply coming online as well. And then as we transition in 2025, NVIDIA announced at their GTC conference this GB200 platform, and that's going to really kind of change the game here. You're going to go from NVIDIA shipping basically chips to their customers to shipping full server rack solutions. So you're seeing ASPs go from hundreds of thousands of dollars for these HGX boards to full stack server racks, which the ASPs are going to be closer to $1.5 to $2 million. So that's going to be a pretty significant driver in terms of revenue inflection going into next year as well.
John, one of the key takeaways from the earnings print and also from Yahoo Finance's exclusive interview with Jensen following those results Was some of the pushback that he had, just the narrative going into this print, was whether or not some of their customers were going to be holding off on current orders, waiting for Blackwell chips and more advanced chips to arrive here in the future. He had pushed back on that. Is that at all still a concern for you, if it ever was?
It was a slight concern. I think they obviously had clearly addressed those concerns. He had said that H100 demand increased throughout Q1, and then he said Hopper demand is going to increasingly ramp throughout Q2. But the one thing I would say is that there is a little bit of sensitivity around kind of their China business. We believe that they've been shipping the H20, which is a compliant GPU, to the China market. It doesn't require an export license, and we think that was a meaningful contributor, like in the near term, to their financial results. And obviously a pretty sensitive topic, because you've seen the Biden administration start to come down a little bit more harshly on what can and cannot be shipped to the China market.
John, investors, traders waking up this morning and trying to figure out, if they didn't already have this as part of their strategy yesterday going into the print or even thereafter, whether now with a split that's announced and ultimately as that comes forward, it might, on cost at least, make it look cheaper to a lot of retail investors even out there. Do they add on Nvidia to their portfolio, and what's the strategy there kind of post-split?
Yeah, I mean, we're from our perspective, split or post-split doesn't matter to us, but I think there's still very favorable risk reward on Nvidia here. We think that they can do close to $50 in earnings, and at that sort of earnings power, Nvidia is trading very attractively relative to its broader peers, right? Kind of in the high teens, low 20s multiple, which is very attractive from a valuation perspective from our point of view.
John, I want to get your thoughts on what we heard from Jensen about supply. Clearly, demand is there, but there are certainly some supply challenges at this point for Nvidia. Here's what he had to say to Yahoo Finance last night.
Every component, every part of our data center is the most complex computer the world's ever made, and so it's sensible that almost everything is constrained.
So, John, what position does that leave Nvidia? Because yes, it's a good position to be in to a certain extent. You want that demand to be there, but you also don't want it to hinder and weigh on growth as well, too.
Yeah, I think it's going to be kind of a near-term constraint as they start to ramp Blackwell into the second half. But I think Nvidia has done a magnificent job of setting up their product roadmap so that it can seamlessly transition and work through these supply constraints, right? As the supply chain and as Nvidia starts to ramp Blackwell into the second half, recall that they are also ramping H200, right, which is kind of a next generation H100 GPU as part of the Hopper family. That GPU is not really supply constrained. So as they're ramping that, we believe that Nvidia obviously is going to be able to work through these supply constraints and ship to volume probably late this year on B100.
But it hasn't just been this year, right? Nvidia's dominance sending shares skyrocketing over 500% in the last 2 years. Take a look at that extreme climb there, and that coming as investors double down on AI hype. All of Nvidia's momentum leading to a lot of bullishness across Wall Street. Bank of America becoming the latest, hiking their price target on Nvidia this week from $1,320 to $1,500. This is now the highest call on Wall Street for the chip giant. The analyst behind the call, Vivek Arya, is Bank of America's senior semiconductor analyst, and he joins us now. Vivek, thank you so much for being here with us to talk about your bullish call on Nvidia. I'm curious, why 1,500? Why not doubling your price target on this name, considering the amount of bullishness and the fundamentals that back it up?
Sure. Good morning. Thank you for having me. So I think there are two aspects to it. The first is where we are in the cycle of converting data centers to accelerated computing, right? The concept of the data center is not new. It's been around since the 1940s. But then we have these multi-decade infrastructure upgrade cycles from the mainframe to the microcomputer to cloud computing. And now we are at the start of what I think would be a decade-long conversion over to accelerated computing. What is accelerated computing? It's a way of taking a lot of very intensive data processing tasks that have to do with images, with voice, with video, with the processing of these large language models, and converting the data center with new kinds of semiconductors to make sure that processing can be done very efficiently. We are just at the start of this cycle. We think that the spending could be anywhere between $250 to $500 billion a year, and NVIDIA is leading the charge. And I know there is often this comparison to let's compare it to Intel of the past, or let's compare it to Cisco of the past, or other parts of the technology upgrade cycles. But what is different is that NVIDIA is bringing a combination of silicon, of systems, of networking, of software, of developers, and that is unprecedented. So to come to your question, technology stocks, the price targets really move because of the size of the market, because of their execution. And even at this $1,500, the stock would essentially be trading at 1 times their earnings growth rate. If you look at the S&P 500, it's trading at 2 times their earnings growth rate. So I would claim that even at this kind of price level, it's actually trading below where the broader market is in terms of the price to earnings to growth ratio.
High target on the street for you, Vivek, for NVIDIA. What is the significance that you see in deals like the one that is being reported this morning? XAI potentially going to be taking the chips that Tesla was supposed to be getting from NVIDIA here.
Yeah, I think there is a race going on between technology companies of various types. We have seen that across the cloud players, who have raised their capital spending forecast to over 40 to 45% growth. Last year, we were thinking that growth would be 20%. It's already 40 to 45%. There is a race between these different technology companies to be the first to support the next large language model, to make sure that they are the destination of choice for a lot of startups who are trying to really kickstart their own generative AI applications. And then this market is broadening from these cloud service provider to a lot of enterprise verticals. And in this most recent quarter, NVIDIA did call out that automotive and automotive customers, which I assume includes Tesla, are part of that really large vertical. So we see this spreading from cloud customers towards automotive, towards healthcare. A lot of drug discovery is being done with this infrastructure. Financial services are benefiting from it. And then the last but not least part that we will start to see more is the rise of this infrastructure among sovereign, right? So we have seen India, Europe, Japan, every country and region, the Middle East, they are trying to make sure that they're able to use their culture, their language to really go and train these large language models. And we think we are just at the start of and that could be a really large infrastructure upgrade cycle as well.
Elon Musk is reportedly ordering NVIDIA to prioritize and ship thousands of AI chips meant for Tesla to X and XAI. That is according to emails obtained by CNBC, but we know from Tesla's first quarter earnings call, Brad, back in April, Elon Musk saying that the EV company would increase the number of active H100s, that's NVIDIA's flagship AI chip, from 35,000 to 85,000 in number by the end of the year. But emails that CNBC obtained from within NVIDIA, from among staffers shared within the company, suggesting that Elon Musk could have exaggerated that number, that 85,000 number, in terms of the number of chips to ship to Tesla in his statements to shareholders. And now, of course, the big news that he could potentially be diverting those chips to X and XAI. Now, NVIDIA's jumped to the $3 trillion market cap, coming ahead of its 10-for-1 stock split tomorrow. Our next guest points to NVIDIA's high share price and volatility as an obstacle for some options traders. So how could the stock split change things, and how should options traders be preparing? Joining us to discuss, we have Matt Amberson. He is Option Research and Technology Services Principal, joining us here. Thank you so much for being here with us. So start with me about this stock split coming up. What should options folks be considering ahead of Friday as a potential trade off of that stock split?
Yeah, thanks a lot for having me. The stock split's going to make NVIDIA a lot more reachable for a lot of these retail traders. Now, you rarely see a stock over 1,000 with a 50% implied volatility. So the prices of the options are extraordinarily high. So option traders are really looking forward to the split. We'll be able to trade it a lot easier without the $1,200 price tag, which is quite high for option trader, just the normal option trader out there.
Yeah, I was going to say, in terms of the retail investor out there, it's a little bit complicated given that high price that we're currently seeing right now. So what would your advice there be, just in terms of, is there an opportunity, a risk-reward setup that would make sense at this point?
Yeah, so Nvidia, it's just a crazy stock, right? It's we haven't seen this since 2000, and there's a measurement called beta, and the beta of Nvidia is 1.7, meaning as the market goes up, it goes up a lot faster. When it goes down a lot faster. So option traders, I think, could profit from not being short, but being long spread. So you could do these way out of the money spreads in Nvidia, and it's a way to trade this stock, the options, a lot more manageably for retail traders. And Nvidia tends to, as you saw in the graphs before, move one way. We saw a large up move and a large down move, and if you get some of these out of the money spreads, you can profit from that. A good risk reward, as you say, and then you measure that for not paying too much, but you could get these out of the money spreads for not too much money, maybe like 4%. You would buy a call and then sell a call $5 higher. You could do the same for a put if you're bearish, and then if you're neutral, you could do both at the same time. So it does present some opportunities with the strikes relatively short together. You could get into some of these spreads with a relatively small initial investment.
I want to zoom out a little bit here on Nvidia, because I'm curious about to what extent options traders should try to play the macro data for a name like Nvidia. I think about the ISM yesterday, for example, driving the whole market higher, including Nvidia, through things though like index funds, ETFs. Does that still mean that a big macro news day is a good day to play your options on a name like Nvidia?
Well, as I said before, the beta is so high that you get a lot more leverage with Nvidia, because really any interest rate announcement really affects Nvidia with such a high PE, as we heard from the earlier guest. The earnings are so far out that any change in expected interest rates really affect the price. So you could get some very large moves, which is why I would talk about out of the money long spreads, especially before macro announcements. Like tomorrow, we have a few. We score those on my firm's platform, the macro events on a scale of 1 to 4. And we have some big announcements tomorrow, and especially interest rates announcements. You could play Nvidia before those.
I think it is sustainable, and it always sounds smart to ask the question, when will this be over? You look at the hockey stick that you just described, Brad. It feels a little scary. It looks a little scary on the chart, but I think the reality is this: we are in inning 3 or 4 of this AI bull market. I think that we are still early, as uncomfortable as that sounds and maybe feels. But I think it's going to feel uncomfortable all the way until we get to eventually being in a true AI bubble, which we think is kind of the culmination of this bull market. And then people will stop talking about valuation altogether. So that's the odd sort of counterintuitive reality, is we're worried right now that things might be over. It's probably not over. When we stop worrying, that's when you should start worrying. I think the stock split for Nvidia, as you said, Sean, I think that will just be kind of a blip here. Obviously, that gets certain people excited. Mentally, you see a lower stock price and people feel like it may be cheaper, even though it's not. I think the reality, though, with Nvidia is they continue to show business momentum. I think that's really what is the most exciting piece of the entire story, is that despite all of us worrying that eventually this demand for chips will slow down, we haven't really seen that slowdown happen yet, and it may take longer to slow down than we think. That's kind of the new opinion that I think the street might think about.
What about the market share that they need to retain in order to continue to maintain this type of sentiment in the street?
I think that's the right question going forward. I mean, right now, from a market share perspective, they likely have 80 to 90% of accelerated compute market share for chips that do power this AI revolution. And I think going forward, they probably need to maintain share in that realm. So the question really is, number one, can AI companies that are building these models like Google, like OpenAI with their partnership with Microsoft, can they eventually generate revenue that makes this investment justified? That's an outstanding question. I think they will. It may take longer than investors hope, but I think they will. The second question, to your point, is can NVIDIA maintain its dominant position providing the brains to these artificial intelligence models? And I think they can for the next 3 to 5 years. I do think that we should pay attention to all of the hyperscalers building their own silicon. There is going to be competition out there, but I still think at least for the next 3 years, NVIDIA is going to be the go-to company.
I know that you like to look at the fundamentals of this company, and there's a lot to say about that. But before we talk about that, let's talk about the split and whether you are also factoring this in as a potential catalyst.
So look, fundamentally, it should mean nothing, as we know. In practice, there is I guess for a lot of these stocks, there is increasingly a retail presence. And to the extent that it makes it more attractive for retail, I mean, maybe. But I mean, to be honest, I think it's at the margin. I'm not really factoring in very, very much. There's plenty of liquidity in this stock anyways. We don't need the retail investors to drive it higher. It's not the first time they've done a split either, by the way. They did a 4-for-1 not that long ago, maybe a couple of years ago.
Right.
And they've done other splits in their history. But I mean, it wasn't that long ago.
Right, and the stock went up after that. But you could argue that was, because the company was growing. I'm just curious. This is just for my own knowledge. Yeah. You and your other cohort of analysts. So how does this work? As of Monday, do you come out with another note and your new price target is just a tenth of what it has been?
No, actually in practice, they will handle, like on the back end, they'll cut my earnings presumably by a factor of 10 and the target price by a factor of 10. The next time I publish a model, I will publish a corrected one. And the only impact there is I'll increase my share count by 10x, which would reduce my EPS by 10x. But right. it all scales. Like it's fine. I don't have to do very much except change one line in the model next time I publish the actual model. That's all.
What's fascinating to me is that, as you note in one of your reports, the shares remain relatively inexpensive, looking at a 35 times forward earnings multiple. Anything you see changing that?
Not yet. I mean, one of the, to the extent that there are bear theses on this stock, I mean, people are worried about, air pockets, capex digestion, that sort of thing. I think going into their last earnings, that was a worry. They've got a product transition from the current generation, which is called Hopper, to the next generation, which is Blackwell. And people, I think, were worried about some kind of an air pocket in front of that transition. And the company kind of took that off the table, I think, on the print itself. At this point, I mean, look, at some point, maybe we'll see something like that, but it definitely does not seem like it's now. Like numbers this year look really good. My guess numbers next year are going to be fine as well. They probably go up. And I mean, I guess calendar 2026, I guess we'll worry about that when we get closer. But it ain't the time to worry now.
I mean, and if you look at the out years and you look at what the revenue estimates are, for example, I mean, the numbers are going to get smaller in terms of the magnitude of growth.
The growth. Yeah, look.
Or are they? Or are they? Are we
forever, right? I mean, fine.
So what's well, and I'm just curious. When you hear, of course, we've got Hopper, we got Blackwell, now we got something called Ruben coming down the pike. At what point do you think there's this risk here of, the relentless need to offer more and eventually disappointing the market?
Well, I mean, who knows, right? I mean, look, I think you're asking a slightly different question. Like, when does this all come to a head, if it comes to a head? And like, we can argue about cyclical air pockets like digestion and that's fine. It'll probably happen at some point. That's not structural. I think the structural worry would be, over the long term, like there's a lot of money that's getting spent. And there has to be a return on that investment, either driving revenues for customers or driving efficiencies and saving costs, or ideally both. And if it were to turn out that, given the amount of money that's being invested, that the returns just don't justify it, then the whole thing would presumably come crumbling down. I mean, for NVIDIA and frankly, for lots of other folks, right? So I think that would be like the long-term structural worry if you're worried about this kind of rolling over like permanently. I personally don't believe that's the case. I do think that there are use cases here. I think companies are already starting to generate returns. They're starting to build business models. We're still early. Clearly, we're still early. but I don't worry too much about it. But I mean, to the extent that you are worried about some sort of structural issue, that would probably be it. But again, it's not now. It will be, you know, we've got a few years of investment to come before we come to that conclusion one way or the other.
So what are the shorter term consideration or concerns that you might have over the next couple quarters with regard to the stock?
Yeah, look, I think the numbers should be fine. I mean, numbers should go up probably. I mean, the question is, you know, how is that relative to expectations? Like sometimes you see stocks beat numbers and yet the stock itself goes down. And that's because what really matters is not so much my numbers or my competitors' numbers. It's the actual buy side, the investors' numbers, which tend to be higher typically than the Wall Street analysts that you sort of see on the screen. For now, though, like I said, I suspect numbers probably more likely have an upward bias than a downward bias. I'm not really worried about any kind of, you know, like I said, near-term air pocket. On their call also, they kind of suggested that the Blackwell, which is their next generation, the Blackwell ramp is ramping earlier than people thought. I think in the near term, things look pretty good. The question will just become as we get closer to earnings and other things, how high do expectations go into those prints? And then like, what do things look like relative to those expectations? That'll be the worry for the next few quarters. But the raw numbers themselves, I think should be fine at this point.
Hey, Stacey, let's switch gears for our final question to you, because I want to ask about Broadcom, which is reporting next week. You recently came out with a note and said you like it. For people who aren't as familiar with Broadcom, where does it sort of fit into this whole new AI universe, and why are you bullish on it?
Yeah, you bet. So Broadcom does a lot of things. They have a semiconductor business. They have a software business. They do a lot of infrastructure work. They also have what I would call the second best AI story in the space, I think, after Nvidia. You know, one of the competing factors to Nvidia is actually like the large hyperscalers, like the Googles and the Metas of the world, are actually doing their own chips. And in most cases, they rely on other outside partners to help them do that. And Broadcom is one of those partners. Broadcom does the AI chips for Google. Google calls them TPUs. They've been working with Google for 8 or 9 years. They're working with Meta as well. They're working with some third customer that they just disclosed recently. They also do AI networking, Ethernet for large language models and generative AI. And networking, frankly, is just as important as the compute. And they're the 800-pound gorilla there. And their current guidance for their AI revenues this year is more than $10 billion out of a $30 billion semiconductor outlook that they're looking for this year. So it's like a third of their semiconductor business they're looking at to be quote unquote AI related this year. And again, what we've seen from everybody in AI, it's one of the few end markets that's doing really, really well. All of these folks have been seeing upward biases to their number. That 10 billion feels fairly conservative to me, but it's what I would call, like I said, the second best AI story in the space after Nvidia.
We have a $10 trillion market cap target for Nvidia by 2030. And I will be candid and tell you, I think it's too low. The reason is that already we see right now about 60,000 GPUs in the data center. Jensen Huang said on stage that we will go toward 1 million GPU data center at some point. So 10 trillion could even be too low. And here's why. One generation, which is Hopper, gave us a 1.5 trillion push. So now we have 4 additional generations that they've laid out for you over the next 4 to 5 years. Now you got to add on software, and you have to add on something like the Omniverse platform, which is how all robotics, likely a near monopoly of robotics, will be developed, because they're the simulation company coming from gaming roots. They basically have an engine and a software platform that will allow robotics that is so far ahead that other companies are going to have a hard time competing. And that comes from simulation roots already. So when you combine, now you have software to think of, you have automotive to think of, you have robotics to think of, and that's already pushing us easily past 10 trillion by 2030.
On what kind of market share are we talking here? Because I mean, there is a competitive landscape where we got to imagine that none of the other chip companies are just going to fall in a ditch.
I estimate that AMD is capable of taking somewhere between 10% to maximum 20% of the market. This is based on the gaming competition these two companies have had for some time. Intel, they are moving well past 20%. Intel is an easier competitor than Nvidia. I think Nvidia clearly is going to be a tougher competitor for AMD. So I would say 10 to 20% AMD on GPUs.
When you take a look, Beth, at least at NVIDIA's valuation right now, the massive run-up that we've seen, in the near term, do you see, I know you're seeing obviously a huge opportunity here over the next several years, but in the near term, Do you see any sort of the fact that the valuation could be stretched at all?
That is probably the most important question, which is not where will NVIDIA be in 2030, but are we buying now? And it's not actually a valuation concern because we're talking a company that has gone up, 600-700% on the bottom line. So valuation actually is quite reasonable because of all these raises and beats. What NVIDIA is going to need is broad market participation. And if you look at the broad market, things are a bit weak. So the best time to buy a stock, in our opinion, is when broad market is participating, which means can NVIDIA hold off on a broad market sell-off? Can it sustain? And that's the question that tech investors need to understand, is that at times it has nothing to do with the stock. It has nothing to do with the individual management team or these amazing fundamentals or the valuation, which we are calling eerily low. What it has to do with is broad market and sentiment.
The beauty of a 10-for-1 split like this is that the average person who couldn't afford that NVIDIA stock can obviously jump in. And there's a lot of people who've been hearing about it. As Brian said, 5 years ago, nobody heard of NVIDIA. I did, but not a lot of people.
Hey, I never questioned you, Bob. Never questioned you. I knew you were all NVIDIA. I knew. I get it.
All good, Brian.
Okay.
All good.
Okay.
Anyway. No, but look, obviously that opens up a lot of opportunities for other people to jump into this AI play. And the reality is, look, they have positioned themselves incredibly well, NVIDIA. Not only do they have the chips, they have that software, and that CUDA software has become the magic glue that people are attaching themselves to allow companies, organizations, big, all the big foundation model guys to use NVIDIA stuff to drive these new services. Interestingly, we'll see if Apple actually does that. That'll be an interesting side discussion. But the bottom line is everybody else, OpenAI and IBM and all these other companies that are doing large foundation models and everything else, it's all being run on NVIDIA. And as individual companies start to do some of this work themselves, of course, some of them are starting to buy these devices. So, the competition is heating up. AMD has never had stronger offerings. Intel is finally getting its Gaudi 3 act together to accelerate. We've got a bunch of smaller companies, but it's going to take a while for these guys to catch up. AMD, of course, is the one that's got the most opportunity in the near term. But it's a tough road for these competitors against NVIDIA because they've cemented themselves in such a strong position.
Bob, over the weekend, I was reading a really cool Evercore note, and they are predicting more than $60 a share in earnings by 2030. Now, if you go to Yahoo Finance, click on NVIDIA, go to the stats page, analyst consensus shows about $27 a share this year. I mean, almost a tripling in earnings through 2030. Is it crazy to think by 2030, NVIDIA is by far the most valuable company in the world, and it's about a $5 to $6 trillion market cap company?
Well, certainly if things keep going in the way they are, that's absolutely within the realm of possibility. But let's think about a couple things. Number one, as I started to mention, competition is getting much tougher. And the truth is, nobody likes, especially in tech, to have one company completely dominate the way that NVIDIA is right now. So you're going to see a lot of companies being more willing to try alternatives just to give them some leverage when it comes to working with NVIDIA, which of course they will continue to do. Number two, anybody that's that big, you start to worry about regulatory concerns. What are the issues around that could pop up? And then finally, and the biggest question is, what if the way we start to do Gen AI changes? We've started to hear discussions. Apple's going to talk about this later today, doing some of that stuff on the device. That doesn't require the NVIDIA chips. These big foundation models driving this, starting to shrink in size, so therefore perhaps I need a little bit less compute. These are the bigger tech questions, implementation questions that we have to watch long term. They're not going to change overnight, to be clear, but those are the big picture questions that, by 2030, certainly I think are going to be a factor.
The memories of the dot-com bubble, if you will, but companies like Dell, companies like Cisco, that had absolutely fantastic runs and relatively a lot better financials than some of the companies they were being compared to, had runs like this, and they went on for years and years and years. And they had times when the valuation was stretched, and they had times when the price was high, but the historic valuation was actually better than it had been. And thus is the way that industry leaders in new industries go.
Hey, Corey, it's Julie here. There's also sort of the speed, though, that we have seen NVIDIA move this time around, right? So we were looking at the number of days it took these various companies to get from $1 trillion to $2 trillion in market cap, and then from 2 to 3. And in NVIDIA's case, it only took 262 days from 1 to 2 and 96 days from 2 to 3, which is much, much shorter than the others. So what does that, what does that tell us about the sustainability, perhaps, of NVIDIA's growth here?
I think it tells us a lot about a lot, but I don't think it tells us anything about the sustainability of the growth. I think what it tells us about is the moment that we are in and the reaction to that moment. And both of these things are happening at paces that we haven't really seen at this scale in the past. We've never seen a company as big as NVIDIA was a year ago, which was very big, grow at the pace it has been growing and get to the size of revenues that it has achieved. We've never seen anything like this. And certainly to do so with fantastic profitability, expanding gross margins, ridiculous operating margins, and tons of free cash flow, and yet their customers don't seem to balk at this whatsoever. We also haven't seen the markets recognize such an amazing thing, but maybe it's understandable that the market is reacting to this quickly, noticing what's going on at this company because it is so big.
Corey, do you think it's a cause for worry for investors when everybody seems to be on the same side of the boat? Meaning, you look at NVIDIA, stock is a monster. Nearly 90% of analysts who cover it say, even here, buy it at these levels. You know, is that a reason to worry? Or, you know what, sometimes the herd is right.
Analysts always say buy it. That's what they say about everything. Buy it, buy it, buy it. They are always raising their price
to be fair,
targets
Corey,
for the
sometimes
entire
they
market.
say hold. They do say hold. You get that.
Yeah, not much. How much do they say hold?
More than they say
5% of the
sell.
time?
I know that, yeah.
How much should they have said it in retrospect, right? So I think that that's not a reason to believe that this company is good. A reason to look at this company and understand what's going on so great is to look at the numbers and look at the growth rate and look at the free cash flow generation, which is the ultimate value or the ultimate success of a business. It's free cash flow creation. And NVIDIA is doing all of these things right now. But again, the pace of the growth of this size and what we hear from all of their customers, at Futurum Group, we talk to all of NVIDIA's competitors and all of their customers, and they're all trying to get more and more from NVIDIA, and they all want to buy that product first and everything else second. And none of them seem to be concerned about the price of what NVIDIA is charging, and recognizing that NVIDIA is raising prices. NVIDIA is taking gross margin in ways you rarely see any business do it, let alone gross margin, operating margin as well. It's just fantastic.
And Corey, the company seems to indicate that it sees no sign of that slowing down. I mean, if you look at the estimates for earnings growth and revenue growth, they are expected to slow down a little bit. I mean, we're talking about from triple digit to double digit. And NVIDIA has pushed back a little bit on this notion that its chips will not be in as high a demand as this AI processing revolution kind of matures. But what do you think?
Well, so you asked a couple of questions there, and let's start with the first part last. But starting with what their growth is and what the market's going to look like, I think it's reasonable to expect right now that this market's just going to get a lot bigger. And selling AI for the purposes of chips that do AI for the purposes that we now think of AI as doing is a fool's errand. You know, when we first got our iPhones, we didn't imagine Uber, right? A multi-billion-dollar businesses being created, Instagram, things like that. It was just sort of faster email and a keyboard on the screen instead of on a BlackBerry, right? It was hard to imagine what the world was going to look like. Similarly, in AI, I think we're going to see incredible new use cases that are hard to imagine right now that 5 years from now will just seem like they're so obvious to us. So it's reasonable to expect unreasonable demand coming from places we can't imagine for AI and therefore for NVIDIA. But I think it's also really important that you brought up the point that the growth rates have been going up. The second derivative of growth has continued to accelerate and go up. That's probably going to change this year. We're probably going to see the growth rate come down for NVIDIA. It's still going to be amazing. It's still going to reflect tremendous growth on the biggest numbers we've ever seen from any company ever. But it's going to be a little bit slower, and I think that will be an inflection point for the stock market.
And Corey, you know, one hot theme that's being talked a lot about is how people look at this broad market rally and they'll say, you know, it's narrow. It's basically, it's NVIDIA and a few other big tech names outperforming everybody else. How are you thinking about that dynamic, Corey?
It is inevitable. We're going to see growth in we're already seeing growth in the numbers of lots of other industries, and we see it coming. I was doing some work today on Lam Research and Global Foundries, right? But related, but different businesses going in different directions. But Lam Research had putting up a fantastic year, It's not NVIDIA, but it's on the growth of this AI stuff, if you will. Global foundries massively expanding their capacity to manufacture semiconductors, all with the belief that AI is going to spread the wealth beyond NVIDIA. We're seeing that in the growth numbers. Look at ServiceNow. Look at Oracle, a stock that I own. You see growth from AI. It's not accruing only to NVIDIA. The market is ascribing the growth mostly to NVIDIA and a few others. But I think that we're certainly going to see the market start to recognize the other success that other companies will have. And that's going to continue to move up the stack, if you will, when it comes to software and services over the coming years. We've only just begun.
NVIDIA briefly touching an all-time high this week. Now, the stock has certainly been on a tear. This year alone, it's up over 160%. The street remaining very bullish on the chip maker. 64 analysts have a buy or outperform rating on the stock. One of those analysts joining us now, we want to bring in Matt Bryson. He's Wedbush Equity Research Hardware Senior Vice President. It's great to see you again, Matt. So talk to us just about this massive run-up that we've seen in NVIDIA. Clearly lots of focus just about the emphasis and the impact that it is having clearly overall on the broader market. What makes you so confident that this momentum is going to continue? And I guess, what do you think that opportunity really looks like?
Yeah, so in the near term, it's all good news, right? They came out in late May, gave us great numbers, gave a great guide. But since then, you've seen new funding for startups in the AI space. The funding numbers are large, so you're talking numerous $1 billion going to places like XAI. Eventually, most of that money gets spent either renting data center space or building data center space. So lots of NVIDIA chips. You've seen news around government funding, and that's all additive to what the cloud service providers are spending. And so if everyone's spending on AI, just things look really good. At some point, I think we need more AI applications to show up. But having said that, I think everyone's made a bet through NVIDIA's next platform, Blackwell, which means things remain good well into next year.
I mean, when we talk about this chip demand, like, is there a good ballpark figure that investors should be going off of in their minds about where these data centers that are being built out will eventually move to in terms of the number of chips that are necessary to really support the applications and the generative AI demand that we're seeing?
So that's a difficult number to come up with. What we're really seeing right now is companies making a bet that the next set of applications that change the world are going to be built on AI. So there's lots of training of these large language models going on, and that's building out the infrastructure that these applications can get built on. I think at the end of the day, the AI opportunity is going to depend on what those applications look like. So if we get self-driving cars built on AI, that changes the world. That needs a ton of investment. If we get something like the next YouTube or the next TikTok or the next Uber built on AI, again, that changes the world. We need a ton of investment. But it's really what that next set of applications look like that we don't know. And that's going to define what the market looks like past this investment and training that we're seeing right now.
When we talk about the next catalyst for NVIDIA, there's been lots of talk, lots of focus on the upcoming shareholder meeting later on this month. Is that going to provide another boost to the stock, and how come?
I don't know if the shareholder meeting changes much. I think that what the next kind of significant catalyst is, they'll have a fall GTC meeting. That will certainly be interesting. They have numbers before then. Those will be interesting. But I think it's really what we see that comes out of Blackwell. So that, in my mind, begins shipping late this year into next. That's going to define what the next step for NVIDIA looks like. But again, there's just really, really strong demand till then. So I don't see any stumbling points kind of through the course of 2024.
What is the kind of market share dispersion that you would be tracking towards?
Yeah, so right now, I would guess NVIDIA has roughly 80% of the market. Moving forward, I think it's an open question as to what their competition looks like. So I certainly believe that AMD can do better than the $4+ billion that they guided to, but that's still a relatively limited fraction of what Nvidia is producing. Certainly, Broadcom is making a bunch of TPUs for Google. We're seeing the cloud service providers work on a lot of their own ASIC architecture. Or chip architecture, but I also think again a lot of that's going to depend on what these applications that show up look like. And at this point, that's kind of the $1 million question as we get beyond this training stage. What are the applications that we're supporting, and that's going to define both what the chips are that support those applications, as well as how much spending there is.
Matt Bryson, Wedbush Equity Research Hardware Senior Vice President. Thanks so much for taking the time here with us today, Matt.
There's this question out there comparing Nvidia to a Cisco. You've been in the game long enough. Talk to me about your take on that comparison.
Yeah, so I grew up in the dot-com era. I think I was about 10 years into my career, and there are definitely parallels, right? Cisco was the driver and the builder of the infrastructure for the internet age. And there was overinvestment in this space, and NVIDIA is clearly one of the biggest builders for infrastructure of this generative AI days. And we do need to be very careful and look for what I call the precursors of something that could pull back. Now, first off, I don't see anything changing for 6 to 9 months, but we do need to look at the downstream profitability that people in the ecosystem are making or not making. These are the software companies like Adobe, Salesforce, SAP, and ServiceNow, because if those enterprises and those consumers aren't paying more for those new AI features, then this whole gravy train comes to a screeching halt, like we saw in the internet bust.
And so all these things considered, what is NVIDIA going to need to continue to prove on a sequential basis at this juncture that's going to be critical to cement this broader story that they've been able to sell the markets on?
Yeah, so growth, it's growth, and more growth. And this next generation of NVIDIA growth, the new growth, will be all about the enterprise. 80% of data for companies and businesses is still on site or on the enterprise edge. So what they're doing is they're enabling companies like HPE, Dell Technologies, and Pure Storage and Lenovo to build that out. And this week, I actually personally attended the HPE and the Pure Storage event. This is what it was all about. This is the second layer of this data center build out.
Well, and it's interesting, in your notes to us, you explained that this is a private cloud play. How bullish of a signal is that for the chip sector in general, but specifically here for NVIDIA?
Well, it's very positive. First of all, there's a little bit of a diversification of risk, because if the only enterprise AI plays are in the public clouds, then it's pretty much winner take all. And I view this enterprise play as there's something really here. And then what you do is you have the VMwares that's owned by Broadcom, the Red Hats of the world, IBM software, and even software from HPE that will get a lift and a juice from this infrastructure build out. And here's the thing, that the enterprise data center play is more durable than, let's say, the public cloud play. It's kind of the gift that keeps on giving. So if NVIDIA and its partners can stick this landing, and enterprises can start either leveraging the benefits from enterprise SaaS companies like I talked about, or building their own, then this is going to be a 5 to 10 year run. And maybe we won't see the dot-com bust like we saw decades ago.
You mentioned all the players in the space, Patrick, and it makes me think about the competition of it all. I'm curious if you can talk about the biggest risk to NVIDIA when it comes to pricing power on its chips, and just give us some context on, the pricing of NVIDIA's chips versus some of their competitors.
Yeah, some of the earlier data center chips that NVIDIA had, they might sell for $5,000, $10,000 a piece, but now we're looking at $30,000 to $40,000 per chip, and that is astronomical. It's probably over 1,000% gross margin, but the longevity here. So you've got two levels of competition. First, you have the merchant silicon providers, the AMDs and the Intels of the world. And then you have the homegrown ones from AWS, from Azure, and from Google. And what it is a race right now is NVIDIA is trying to get a lock-in through their software. I do believe that chip makers and AMD in particular have come up and have as competitive or almost as competitive chips for training. 100% there are competitive chips for inference, but it's that software lock-in that's referred to as CUDA or NVIDIA NIMs that NVIDIA is trying to stick. So regardless of who has the better chip, you have to go with NVIDIA because of its software.
Yeah, eventually every dinner table is going to know about compute unified device, whatever the A stands for, but
Right.
applications, something like that. But anyway, at the end of the day, and I'll look that up and give that back to our viewers here. Yeah. Architecture, that's what it is. But anyway, all these things considered, Patrick, it's been one of the most overcrowded, or de facto, as Goldman Sachs has called it, AI trades here. So as we think about NVIDIA going forward and the 10-year horizon that you were just looking at, I mean, we're right now in the ballpark of a $3 trillion market cap. What do you think it could get up to?
I don't see any reason it couldn't get up to 4 trillion. And again, a lot of this is based on expectations, because you look at PE, it's pretty astronomical, right? And if we can see some positive signs from the downstream players, because other people have to make money, not just NVIDIA, again, otherwise this comes to a screeching halt. But I don't see any reason why this couldn't get to 4 trillion if we continue to see those positive signs down in the channel, and we keep seeing positive news coming out from NVIDIA with its partners.
Patrick Moorhead, who was the More Insights and Strategy founder, CEO, and chief analyst. Patrick, great to speak with you as always.
Thank you, Brad and Maddie.
NVIDIA shares are still falling about 90 minutes into trading after its guidance disappointed Wall Street. So should investors buy the dip, or is there a reason to step back from the AI giant? We have Nancy Tengler here to kick off today's show. She is the CEO and Chief Investment Officer at Laffer Tengler Investments. Nancy, great to have you back here on the program with us. So first and foremost, I got to get what you make of the report that we saw from NVIDIA. Shares moving lower by about 2.5% as of right now. They've been down throughout trade post-report, but it's not weighing on the markets that much, which is interesting considering the outsized move that we've seen driven by NVIDIA. What do you make of this?
Yeah, Brad, thanks so much for having me. Well, I think what you're seeing is that the other AI proxies like Broadcom and AMD, and then some, expanded out from there, are doing well on the report. I think the issue is that the stock had run off the recent lows pretty hard. It's not super expensive when you look at it on estimated sales or estimated price to earnings ratios, even the PEG ratio. But it was set up for a disappointment on the Blackwell yield problem. I think the company has right-sized that. I think you want to use weakness as an opportunity to own this stock for the next 5 to 10 years. Interesting.
And so we've heard of valuations perhaps in the future, over the next 5 to 10 years, getting as high as maybe $10 trillion for this company. Where do you believe that there's going to be perhaps the next big thrust of energy around NVIDIA, or is this going to be in kind of wait and see mode and ultimately watching the company deliver upon what the market expects of it?
Well, it's interesting. If you look at the decelerating growth that analysts also seem to be worried about, and you go back and compare that to Microsoft's 90% growth in the cloud and then subsequent slowdown. I mean, we know that these levels of growth are not necessarily sustainable. And so I think what you want to do as an investor, but by the way, that did not hurt Microsoft's stock price. It's up 3 to 4 times from that decelerating cloud growth. As the use cases for AI go up, and they are, all you have to do is look at a company like Walmart, whose margins expanded last quarter without raising prices, and we believe that was largely due to their implementation of AI across the platform. So in advertising, e-commerce, stocking, cataloging products, this is what we need to see next. And I think we are seeing it broaden out by industry, and that will be the next catalyst for growth. So I think we're in early innings. We've drawn an analogy to the 1990s for the last couple of years. I was managing money then. This is not the internet bubble. This is not eyeballs being measured. This is real technology that will drive productivity-driven growth. And I think we saw that with the GDP numbers coming up in productivity in the almost close to 3%. So you just have to kind of steel your nerves and ignore the volatility.
And so for Nvidia, down today while the markets are higher, AMD, I'm taking a look at our Wi-Fi Interactive. AMD is actually up by about 1.25% right now. I mean, we didn't think we'd have a day where Nvidia was lower, but the market's still holding on to gains. So you're also keeping tabs on some of these other chip stocks to see where there might be opportunities. Where are you sensing those opportunities?
Well, so we added we added AMD to our portfolio in the last quarter on the sell-off. This company needs 1% growth, market share growth in GPUs to increase revenues by $1 billion. So they can take the crumbs and still do well. And one of the things that I find fascinating is that Lisa Su and Jensen Huang are sort of distant cousins. And so he recently said, we're family, we buy from family. So I think AMD is in a good, solid number 2 spot, and we expect to see that continue. We love the transaction they just announced with ZT Systems. So, and they're sort of taking a page out of the Nvidia playbook. We've been long-term owners of Broadcom. We've actually had to trim it back. We were buying it when the yield was 4%. It's now about 1.5% due to price outperformance. We still like the name. We think it is a place you want to be exposed to, but do not underestimate the growth in generative AI. I think there's a lot of naysayers coming out, and we're seeing the use cases expand pretty dramatically.
Nvidia reported Q2 earnings Wednesday, beating on the top and bottom lines, but after several quarters of blockbuster blowout results, the numbers still weren't good enough for many investors. So the big question is, the AI trade already cooling off? Well, joining us now to talk about it is Bradley Tusk, Tusk Venture Partners founder and CEO. Bradley, great to see you.
Yeah, thanks for having me.
So I'll start right there. Nvidia, I mean, it was a solid report, solid guide, right? Yeah. Obviously, investors wanted more. I'm just curious how you thought about it, Bradley, and just what you thought it made of the broader AI trend.
Right. I mean, the funny thing is, it exceeded expectations. Right. It exceeded, a couple of days ago when we were looking at, like, okay, where does Nvidia need to get to make investors happy? Mm-hmm. It hit that and then did better. And so really, it sort of, I think, speaks to a slightly broader concern, which is at the back of investors' minds are starting to wonder, like, hey, are we overinflating this? Is it going too far? Because they couldn't have really done any better than they did. It's unreasonable, like, it's your fault. It's not their fault. It's a question of, are they overvalued? And that's collectively our fault, right? They're going to take as much as they could possibly get. That's human nature. So the question really becomes, and one that I, as an early stage tech investor, keep asking is, okay, we understand that this is transformative technology. Are the revenue streams there? So for example, we saw this morning an announcement that OpenAI is raising again and at over $100 billion valuation. I'm not entirely sure what the revenue model is, right? Maybe they're just selling information off of the LLMs to other AI providers. Maybe they'll turn into a version of search like Google and have ads. But it's a lot of this sort of like, oh, it's gonna be incredible, it's gonna change everything. But at some point, there's gotta be revenue. So like, I have found that I've said no to the vast majority of early stage AI deals that have come my way, because it keeps being like, okay, we want $100 or $150 million valuation for a Series A company company with $1 million in revenue or $2 million in revenue. And like, that's crazy, right? And like, I understand that like it sounds cool to be investing in AI, but ultimately like my job is to return capital to my LPs. And if I'm investing at widely inflated values, I can't do that. And so I wonder if the same hesitancy that I'm feeling a little bit on the early stage venture side is a little bit of what we're seeing in the market today with Nvidia.
We have Andrew Chang. He is the technology director at S&P Global Ratings here. Andrew, you heard what some analysts are already saying in reaction to this report. We heard from company executives on the call last night. Want to get your read through.
Yeah, at S&P, we felt that this was a very strong second quarter. It met and exceeded our expectations, especially the data center compute revenue, which is essentially GPUs. Up 162% year over year, so massive growth there. But I guess it fell a bit short on the third quarter guide. $32.5 billion is strong, but I think the street whisper numbers were more north of 33, perhaps even 34 billion, so a bit shy on that front. At the same time, what I was most focused on was the Blackwell progress, and that was the main concern going into earnings. And I think Jensen put that to rest. Blackwell is sampling now. Started volume production, shipping in the fourth quarter. We'll have billions of revenues this fiscal year, all positive sign. Meanwhile, Hopper demand is still very strong. So the so-called delay in Blackwell, I think, sets up the company nicely, frankly, for calendar 25.
And Andrew, you have a AA negative credit rating on Nvidia. For those not familiar with the definitions of these credit ratings, what does that mean and why did you assign that one to Nvidia?
Sure. First of all, the credit rating is AA minus with a stable outlook. We upgraded the company back in April. And to put it plainly, NVIDIA is the highest rated semiconductor company globally, along with TSMC in Taiwan and Samsung Electronics in Korea. So the highest rating from the semi perspective. We really like the tech lead that the company has and the strong product execution thus far. And we view NVIDIA, unlike other semi companies, as a platform company, meaning it's not only a GPU company, but it has a full rack scale solution along with software, which no one has. And frankly, AMD's acquisition or announced acquisition last week speaks to this unique strategy that NVIDIA has fostered and frankly has dominated over the past 5 years or so. So from a credit perspective, high profitability, high cash flow, really strong balance sheet.
We continue to hear from tech execs that there's a far greater risk of underinvesting in AI right now. But at what point, if we didn't see the return on these investments actually come to fruition, would it start to impact some of their credit ratings, knowing that there's so much money that would have been going towards these expenditures and out the door, essentially, to bring this to life?
Yeah, I think that's the main risk from the credit perspective. Which is the potential for short-term swings in demand despite the long-term massive growth potential. So this is not going to be an up and to the right every quarter. Hyperscalers, as you mentioned, they can't spend fast enough. But if the ROI on their investments aren't up to par, you could easily see Amazon's and Microsoft's pausing purchases for multiple quarters. They've done that before with general servers, so they can clearly do that with AI servers. And when that day comes, numbers will be, I can't predict when. It's not for at least a couple of quarters, but over the next, let's say, calendar 25, I could see a scenario where the hyperscale spending declines meaningfully, and that could cause some panic among investors. But we have to remember that this is a long-term growth story, that we should not be so fixated on short-term swings.
Okay, so it's possible to see that deceleration of growth, at least from the hyperscaler spending on these products in 2025. I know you said it could come in the next few quarters there, but will there be signs that investors can look for that is approaching?
Yeah, the easiest sign you can look for is obviously all the commentaries from Amazon, Google, Microsoft, et cetera. And the commentaries have been nothing but strong. They're collectively, from a hyperscaler capex perspective, probably growing 50, 60% in calendar 24. We don't have a good read on what that will be in 25, but we're fairly certain that'll be growing next year. I would say growing 10%, 15% is a good likely scenario and probably priced into the market. If you start seeing commentaries regarding, hey, we're starting to slow down, or our capex spend next quarter will be flat versus the prior quarter, that should be sort of a signal to investors that yes, Microsoft is now concerned about the return on investment on all these AI servers.
You mentioned at the top of our discussion here that NVIDIA has one of, if not the strongest credit rating among some of the AI and tech companies on the street right now. Where are you hearing companies talk about AI, though, and saying, okay, they may be talking about it, but their credit rating doesn't suggest that they're actually in good standing enough to be able to pull off some of these massive investments?
Yeah, I would say the overall software sector, which I know has underperformed this year, are talking about AI, but we're not seeing tangible revenues yet, perhaps with the exception of, let's say, Microsoft or ServiceNow. But there are many companies out there, Adobe, Salesforce. These companies, again, software spending has been somewhat of a lagging behind hardware spending. But our view is that the AI hardware spending will, over time, translate into better spending on the software side and also on the IT services side. So ratings impact for software has been limited thus far, but I could see maybe 2 to 4 quarters from now where software spending does pick up on the AI side.
Andrew Chang, the technology director at S&P Global Ratings. Thank you so much for your time today.
Great, thank you.
Nvidia shares under pressure despite posting better than anticipated second quarter earnings. Wall Street's lackluster reception to Nvidia's results stirring questions on the health of the AI boom. CFRA Research Senior Equity Analyst Angelo Zeno joins us now with more. Angelo, always great to speak with you to get clarity on what's going on in the broader tech space that you follow so closely. Is this sort of a sell the news event, or did it fundamentally change the narrative when it comes to the health of NVIDIA as a company? Not a stock story, but as a company story moving forward.
Yeah, no, so thanks for having me, Madison. And listen, I think more the former, right? So I think this is a situation where nothing's really kind of changed, more of the sell the news kind of event. And listen, at the end of the day, this is a company that beat their numbers, probably on the data center side, we call it about $1.5 billion or so. And then on the guidance side of things, also kind of guided a little bit above the street, but maybe not as good as it historically has done. A big reason for that, obviously, is because those sequential kind of gains at this point in time are definitely slowing. You're looking at about 15% sequential growth that we saw in the July quarter. I think that's expected to decelerate to about 8 to 10% here, let's call it, in the October quarter. So a big part of that is just the law of numbers in many respects. This is a company, in terms of their revenue, that has grown essentially 5x in the last 6 quarters. So that run rate is just absolutely phenomenal. We do think that, when you kind of look at how they're performing right now, specifically with the delayed Blackwell launch, that's even more impressive in our view, kind of with the momentum that we're seeing on both the H100 and the H200. And with the Blackwell launch that we expect, by the end of this year into early 2025, which will ramp, we actually see the potential for maybe even sequential growth to start to accelerate slightly from what we're seeing here in the current quarter, the October quarter.
Angelo, let me ask you, these big tech giants, Angelo, that are spending on AI, which is great news for NVIDIA. I'm curious, do you see that continuing, Angelo? Any signs of a slowdown there?
So we see it continuing, just not at the pace that it has been, right? So in terms of kind of what we're looking at from kind of the biggest 5 spenders in the US here in 2024, they're looking at about 35 to 40% growth. And next year, we think that decelerates closer to about 15 to 20% growth. And then I think what's more important now at this point in time is, given the questions about sustainability of kind of the NVIDIA momentum, is how does 2026 and even kind of go into 2027 look? And our view, at least as a placeholder right now, going into 2026, is about 5 to 10% capex growth. I think, a big question that investors have or a concern when it comes to NVIDIA, they kind of look at those kind of 70% declines that you've seen in the stock price. I think, 2 out of the last 6 years or what have you. A big reason for those declines actually is because back then, NVIDIA had a different complexion in terms of their revenue base. You're looking at about 50% or north of 50% of their revenue base tied to gaming. Now we're about 88% of their business tied to these hyperscalers, as well as kind of other data center type drivers out there. So a completely different complexion. But that said, there's clearly going to be risk looking ahead for this name.
Is that a bad thing, Angelo? I spoke with a guest yesterday who mentioned something about this, the idea that it's not a good thing for a couple of companies to be responsible for the majority of NVIDIA's revenue. Is that a negative catalyst for NVIDIA?
I think it depends on how you want to look at it, right? I'd actually personally rather be kind of tied to these hyperscalers than I would the consumer, to be honest with you. And a big reason for that is when you kind of look at the revenue trajectory of these hyperscalers over the last 2 decades, they're much healthier than the consumer themselves. So in many respects, I don't necessarily think it's a bad thing. I think it becomes a bad thing when you hit maybe a point where you're hitting spending levels that are unsustainable. But when you kind of look at these hyperscalers right now, in our view, in 2024 and even into 2025, these companies continue to grow free cash flow despite the fact that they're significantly increasing capex spend. And I think that's really important to note, because that continues to tell you that as long as these companies continue to have healthy end market trends, tied to the cloud, tied to digital ad spend, then it should bode well for them to continue to spend fairly, at a fairly healthy clip going forward.
Angelo, so all right, NVIDIA's come and gone. After the bell today, we got another name reporting in your coverage universe, Marvell. I'm curious what you are looking for in that report, Angelo. Is that a name I want to own?
I mean, that's a name we've liked for a little while here. We do have a strong buy recommendation on the name, so it's a name we like a lot. Not necessarily for any given quarter, because who knows what is going to happen in any given quarter. But the good thing here is, finally, when you kind of look at their non-AI businesses, kind of their more kind of legacy type businesses in areas like carrier infrastructure, the consumer side of things. Those enterprise networking, those businesses have declined 50 to 70% over the last 2 to 3 quarters. Our view is kind of the inventory correction has kind of really played itself out at this point in time, and you're now looking at potential sequential improvement here in the July quarter, and more importantly, in the following 2 to 3 quarters. So we actually think they're at a point now where they're actually going to start seeing sequential acceleration because of the unwind we've seen essentially kind of play itself out on the legacy businesses.
And Angelo, we're also anticipating Broadcom earnings next week. What are you looking for?
As far as Broadcom is concerned, I mean, I think, I think they continue to do very well. I mean, this is essentially a company at this point in time on the semiconductor side of things, really tied to kind of both the compute side of things in terms of their custom silicon business, tied to Apple, which we think is ordering very nicely ahead of this iPhone 16 cycle, and of course the networking business, which is kind of the bread and butter of their semiconductor business, and we think that is kind of running on all cylinders. So as far as kind of the semiconductor business, AI is driving that business very well as Apple, and then the VMware side of things, they continue to exceed our expectations on both the cost-cutting side of things as well as kind of the revenue growth trajectory. And we don't see that changing at all as far as the numbers are concerned here for the July quarter.
And Angelo, it's had a heck of a run already. It's up more than 70% here over the past 12 months, Angelo, but you must still find valuation attractive at these levels.
I wouldn't necessarily say valuation is attractive at this point in time, Josh, but I will say this, we don't think they're egregious. So, we're kind of more in the camp of, at least with most of these kind of AI-driven names, you see some pronounced pullbacks out there. Those are where the buying opportunities are really to be found. So I wouldn't necessarily be chasing any of these names at this point in time, but the fundamentals still look really strong, especially for a name like Broadcom, we think kind of going into the print and going into 2025.
All right, not egregious. We'll take it, Angelo. Thank you as always for joining the show. Appreciate it.
All right, thanks for having me.
Sustaining growth at the current rate, impossible. This is probably this year, $130 billion business. It's virtually impossible for them to grow it again at like 135% or so. And consensus clearly points to that. Consensus is looking for about 40% revenue growth next year. And that's really where the problem lies. Certainly in terms of expectations and outlook, because the company admits things are going to slow significantly next year. And if you take them at their word, you would probably go 20 to 40% growth, somewhere like that, and 40% is already baked into expectations. So that's where the level of disappointment lies. However, it's not all bad news, because if you look at the financial performance of this company, it is a shareholder's dream, i.e. almost all the profits and all the cash flow straight to the bottom line, which is why the company is only on 30 times forward earnings, which in the tech sector is not an outrageous multiple. And that's why it hasn't fallen 20 to 30% yesterday and continued to fall today. It's got strong valuation support.
Richard, if someone has owned NVIDIA for the past 5 years, they're sitting on big gains, and they see a quarter like this, what should they be doing next?
Excellent question. So if we break down exactly what there is and what there is not. So the stock's gone up 10 times in the last 18 months. Is it going to go up 10 times again? No. What that tells you is that the easy money in NVIDIA has been made. So if you're the type of investor that likes to pick winners, go for alpha rather than a beta return, arguably perhaps you should sell it and buy something else. Flip side of that is if you are a beta type of investor, then, and look at it relative to the rest of the technology sector, 30 times earnings and 40% and probably more than 40% EPS growth next year is a much better deal than you will get in either Apple or Google or Meta Platforms or Amazon. So from a valuation perspective, you could make an argument to hold on to it. It's really down to the type of investment style that the investor is choosing that would make that decision.
Richard, it's interesting. I've been kind of nerding out this morning on why NVIDIA has really the entrenchment that it does. And it comes back to what's called CUDA as well here, Compute Unified Device Architecture, and its chips being the only chips that could really run this for a certain point of time. And now it seems like there's going to be, some ability for that to run on other chips, or at least a means by which that could be done without sacrificing compute power. And I bring that up because investors are trying to figure out as well where there are other companies that they could look at, chip companies that could have a similar type of output without the energy constraints, if you will, for the data center. All that considered, what are those other companies that investors would be apt to look towards?
Well, it's going to be the usual suspects, isn't it? So if you look at Meta, Microsoft, Amazon, and Google, they're all designing their own chips. There's plenty of competition out there. There's a company called Cerebras, which is private, another company called GraphCore that's just been acquired by SoftBank. There's plenty of competition. The real problem is, I suspect that in this generation, and while CUDA remains so important to developers of artificial intelligence, no one is going to lay a glove or even make a dent in NVIDIA's market share. And that's not going to continue forever, but I think for the next 18 months at least, that's the way it's going to be.
So, Patrick, you would say that the headwinds for NVIDIA are more focused on the macroeconomic challenges than even, say, Wall Street's expectations or the valuations around the stock?
I would say the stock price is absolutely, but when you look at the growth, the 100, 200% growth, this is all about delivering Blackwell on time, like Jensen said on the call, doing that with highest level of compatibility with the best yields that has a positive impact on costs and hence margins.
It might be an unfair analogy, Patrick, but I mean, this gives me the vibes of what Microsoft went through in the late 90s, early 2000s, especially as there was so much rapid innovation within software, and Microsoft was trying to make sure that it could stave off competition and grow out its business. Now, we saw what happened in the stock thereafter. We saw the legal proceedings that played out. How much of what's happening with NVIDIA right now is analogous to what took place with Microsoft, and for investors to try and draw comparisons right now?
When Microsoft was put under the microscope over 2 decades ago, it was like putting sand in a gas tank. It slowed the company down. It slows every company down. You literally have to get legal approval for pricing. You have to put it in writing. Everything you say is going to be captured. It fundamentally slows a company down. I don't believe, like Microsoft, that the Department of Justice would try to break up NVIDIA like it tried to do. And by the way, it did get a ruling that it did need to get broken up, but that was reversed on appeal, but NVIDIA needs to very much watch what it's doing. And what's interesting is you always have complaints. And I think the complaints that we will see later who came forward is more than just direct competitors. I also believe these are likely some of NVIDIA's largest hyperscaler customers out there. Quite frankly, nobody is comfortable out there with NVIDIA having 90% market share out there.
NVIDIA's antitrust pressure is escalating. According to Bloomberg, the AI heavyweight has received several subpoenas from the Department of Justice as part of an ongoing investigation into NVIDIA's dominance in the AI space. With us to discuss, we've got Bill Baer, who is the former Assistant Attorney General of the DOJ's Antitrust Division and current visiting fellow at the Brookings Institution.
We don't know a lot about what the Justice Department is doing here. We understand there have been subpoenas that have come out. We understand there's some concern that NVIDIA may be trying to force purchasers of its processors, AI processors, chips, to be exclusive, let NVIDIA be its exclusive supplier, and charging higher prices for those customers who are sourcing chips from multiple companies. That could be an antitrust problem. But it's really important to note the subpoena is an early stage event in an antitrust inquiry. There's going to be a lot of time for the government and NVIDIA to negotiate what's going to be complied, both in terms of documents and data. A lot of time for the Justice Department to analyze it. And then if they want to keep going, they're going to subpoena deposition testimony from company officials, from competitors, from customers who may feel aggrieved. So we've got a long way to go. This is not a matter of weeks, it's months.
Well, and it's interesting because we spoke with Patrick Moorhead earlier about the potential timeline. He's an analyst who looks at some of the chip stocks. Let's take a listen to what he had to say about the path forward here.
I think investors know, particularly institutional investors, that any type of Department of Justice ruling, I mean, my gosh, this takes a decade. What NVIDIA can be doing is to continue to have the highest performance computing in the data center to solve the problems of the hyperscalers and the enterprises and the tier 2 CSPs.
In your experience, Bill, does a probe like this, which according to Patrick could take up to a decade, prevent companies from exploring any future growth opportunities? And could that potentially weigh on a company like NVIDIA moving forward? Or will this sort of be business as usual with the DOJ and NVIDIA?
I think most companies would continue to pursue the practices they think that are profit maximizing. I do think it's a bit of hyperbole to suggest it's going to take a decade. At the same time, one of the things the Federal Trade Commission and the Antitrust Division are trying to do is get ahead of the curve, figure out where a market may be trending toward a monopoly, and intervene earlier. They're certainly trying to do that in the AI space.
And so for the Department of Justice and other regulatory bodies that are trying to both at the same time wrap their heads around a new technology wave that they're seeing and then understand how to apply any type of the legal constructs that already exist here, how much of a learning curve do you think there's still going to be around such an innovative part of the broader tech sector right now?
Well, I think the government's gotten pretty sophisticated about antitrust analysis of the tech sector. Look at the Google case, Google search engine case, which DOJ recently won. We're about to have a trial on Google ad tech. So the government has gotten more knowledgeable, more sophisticated, and I think moving more quickly than maybe 15 or 20 years ago.
NVIDIA now denying reports that it received a subpoena from the Department of Justice as part of an antitrust probe. On Wednesday, NVIDIA updated an earlier statement made to Yahoo Finance saying, quote, "We've inquired with the U.S. Department of Justice and have not been subpoenaed." Nonetheless, we're happy to answer any questions regulators may have about our business. Earlier this week, Bloomberg had reported subpoenas were sent to the chip giant as part of a probe, sparking concern amongst investors and sending Nvidia shares down. On Tuesday, the stock shed nearly $300 billion from its market cap. That was the biggest one-day stock wipeout in U.S. history. Brad, I think this is a really important and interesting story because to me, it's a little bit of semantics, right? We know that the Department of Justice has been investigating a lot of the tech companies right now. They've been asking questions of Nvidia, of its customers, of its suppliers. And so, yes, they're denying the actual receiving of any sort of subpoena, but don't be surprised if you hear news about this in the future because Nvidia does have such a corner on the GPU market. Our guest Patrick Moorhead yesterday saying that it's about 90% of the GPU data center market. Having said that, though, it's not illegal to be a monopoly. If you are a company that is, deserving of whatever costs the market is going to bear, that's what capitalism is.
Taking a look at Nvidia shares this year up 172%. The rally cooling just a bit as of late, but an options trade this week could aid in a new rally. There's a big call trade this Thursday on Nvidia, and joining us now for more, we want to bring in David Boole. He's Baycrest Managing Director. David, it's great to see you again. So here we are with Nvidia. We've seen a bit of a rally so far this month. Shares up just about 11%. We're sitting just shy of that all-time high. What is that catalyst? Do you see a catalyst potentially here on the horizon?
The catalyst simply could be seasonality. I've noticed that Nvidia stock has been incredibly strong in Q4 and especially into Q1. And we're kind of exiting this regime where I look at the options where investors have been using Nvidia options that are priced very high because the stock moves so much. They're not necessarily rich to extract some income, selling calls against long stock, selling puts, be willing to buy it lower. And now we're back, it seems, after this huge trade on Thursday into a regime where clients are buying Nvidia calls. And that in itself can, apart from the fundamental story, of course, can help propel the stock higher, where if there's a surge in upside call buying, this was a hallmark of the rally in 2023 and early 2024. Seems like we could be getting back to that type of regime where investors are reaching for the upside via Nvidia calls.
It doesn't seem like this is for a daily options play, but a more long-term one. So where are the strongest contracts that you're seeing right now? Even as Nvidia right now at this juncture is just within a couple bucks of its all-time high.
So the big trade that printed on Thursday, they got a lot of people in my world speaking, was unusual in the size. About $200 million in option premium was spent on Nvidia March calls. The strikes were up 20% to up 40%. The other unusual part about this trade was that about 25 different call strikes were bought or traded. It seemed like they were bought based on how the stock reacted simultaneously. This is odd. Sometimes we call this a strip of options. Often you see this in index options, VIX or SPX, if you're replicating something on the other side of this. So there's a chance there's some sort of exotic structure on the other side of this trade that somebody is hedging, or it could just be an asset manager looking to get long exposure into March. Either way, this position is out there and we see the footprint in the listed option market. And so someone's playing for a rally, into March. You capture two earnings cycles, November and February. And the beginning of the year, January, February, March, it's incredibly strong for Nvidia. It was up 80% in 2023, up 100% in 2024 in these first 3 months of the year. So I think investors could be looking forward to possibly a similar move in 2025.
Yeah, David, when you talk about, and that really puts it in perspective, right? Maybe the size of the move that we could see, but talk to us just about the size of the positioning there that you mentioned. That really caught my attention because how much of that really has to play into how much that could exacerbate this move here to the upside? And on the flip side, how does volatility then potentially play into all this?
So it definitely could exacerbate it. I mean, there's a story in the options market. There's a story outside of the options market. I think it's all intertwined. But if you have a lot of investors that are long calls on the upside and dealers and market makers that are selling these calls are hedged, as the stock goes higher, they need to buy the stock as the stock rallies. Also, there's a volatility exposure. About 6-month implied volatility, which this option trade was, is about 50%, which is very high. If not the highest implied volatility in the S&P 500 It's one of the highest, and it's not overvalued. The stock actually moves that much, which is incredible for a stock of this size. And if implied volatility goes up, it could create a need through the dynamics of these call options for the dealers on the other side of these calls to buy even more stock as the stock goes higher. So it's a different regime, like I mentioned earlier, compared to the last time I was on when we talked about Nvidia earnings, where investors seem to be selling calls. There was a huge short call position in the 130 strike that I talked about might be difficult to get through that 130 strike. That type of positioning is not there as much, and now it's more clients looking to play the upside, and the whole move could essentially be exacerbated.
You know, David, just as I'm looking at the market cap for NVIDIA right now, based on what you're telling us in the potential upside, or at least what's being baked in by some of the options contracts right now, it looks like investors are positioning themselves, or at least the mentality and the framework around it is this company potentially getting to a $4 trillion and beyond market cap. I wonder what the math you're running is for how long this company could continue to run higher and the valuation that the options market is trying to wrap its mind around.
It's a great question. I mean, it's not what I look at every day to understand if 3 trillion is the right valuation or 5 trillion is the right valuation. But clearly, if there's a market melt up like the last segment right before me, Nvidia could be at the leading edge of this melt higher. And the news flow coming out of Nvidia lately has been incredibly strong. And I'm looking at the options positioning, and right now it seems like the stock really could run higher. I would recommend playing it along with this investor with short-term call spreads or longer-term 6-month calls. You know, in case the stock goes back to a $2.5 trillion valuation, I think calls are a really interesting structure because implied volatility has dropped down over the last 3 months from its highs. So the calls, while you're spending a decent amount of premium, they're not as expensive as they used to be. And it's a way to get exposure to a potential surge higher without having that downside exposure or risking a finite amount of money when you buy calls or call spreads.
So how should you be positioned among these big chip names? For more, I want to welcome in Dr. Stacy Rasgon, Bernstein Managing Director and Senior Analyst. Stacy, always great to see you. So let's talk NVIDIA here. This stock, Stacy, is up about 14% already this month. I'm sure it helps CEO Jensen Huang when he's out there, Stacy, saying, you know what, demand for my Blackwell chip, it's insane. Walk us through the move, Stacy. Is it justified in your opinion?
Yeah, look, so, you know, the stock, if you go back a couple of months ago when they reported earnings, the stock sold off a bit after that print. And it actually wasn't really because of the demand. It was because of the gross margins. They had suggested margins come down a little bit into the end of the year, primarily on mix, by the way. And it's because a lot of these new products are starting to ramp and they're very complex and they're not cost optimized yet. And as people have, you know, kind of done more of their checks as you go through the quarter, and we met with them and everything else, it's very clear for a few things. One is that, you know, the margins, they're not coming down a lot. They're still well into the 70s, like they're fine. And the demand, like I guess with every day that goes along, it just looks like it's getting better and better and better. And you're right, you know, Jensen was out, I think, on CNBC or wherever, talking about it was insane. And, you know, they're looking for material amounts of new products to ramp as we go from Q3 to Q4 as that product hits the market. But even the older generation stuff, the older Hopper chips, our demand is still off the charts, so that's still growing. And then you couple that, you know, AMD had their event last week. And again, I always say this, I don't want to knock AMD, like they're doing very well for where they were coming from. Like this business for them might do $5 billion this year. It was $0 a year ago, so that's fine. But if you look at kind of the roadmap that's going forward, and you look at some of the specs they put in for their new products, it's called the MI325 is the new one. It barely stacks up against the Hopper chips that NVIDIA has been shipping for 1.5 years, 2 years. And the new NVIDIA chips, the Blackwell chips, the new stuff, I mean, it's night and day in terms of the capabilities of that. So the gap in terms of timing between what NVIDIA is delivering, what AMD is delivering is still very, very wide. I think it's still NVIDIA's game to lose. And then I think finally, you know, it even gets with some of the comments you just made about Alphabet and nuclear reactors, and people are foreseeing demand continuing, and they're actually making investments to enable that. And with all these stocks, like there's a big worry that just the numbers have gotten so big so quickly, they're just worried about sustainability. But clearly everything we're seeing from the supply chain and the customers, it doesn't suggest that there's any sort of faltering of demand anytime soon. Now, quite the opposite. So, I mean, that's what's been taking it up.
Well, and I think that's a really interesting and important point that you make, Stacey, because I think part of the sort of pullback in Nvidia stock, perhaps in addition to there being questions about supply and demand, et cetera, was this idea that all of the demand is being soaked up by the hyperscalers. They're that sort of middleman, if you will. But it seemed like there were questions about where it goes from there, what their customers are doing, how their customers are using it. And it doesn't seem like that question has necessarily gone away, but maybe it doesn't matter if the hyperscalers are just buying everything they can.
So it's not all hyperscalers. I think Nvidia themselves, I can't remember the number, 45% maybe of their revenue right now was what they called, large cloud vendors and consumer internet companies. So kind of those guys. So it's not all going to them, but a lot of it is. And clearly they're the ones with the deepest pockets and they can place the biggest orders and it can be lumpy. For now, at least, they can continue to spend. They're kind of in almost like an existential arms race, right? I think Google's CEO did put this. He kind of suggested that the risks of underinvestment were much bigger than the risks of overinvestment. And so as of right now, they can continue to spend. Now, certainly over time, there needs to be a return. And clearly, if it turns out there's no return on all this stuff, then the whole thing comes crumbling down for NVIDIA and frankly, probably for everybody, both in and out of semis, right? However, though, I don't think that is really in question. I think that there is a return. And return can come two different ways. It can be driving revenues and new business models that drive revenues. It can also be driving productivity. At least in the near to medium term, the large hyperscalers can spend even if the return is not there. They generate hundreds of billions of dollars of operating profit every year. Like they can afford to spend if they think it's existential. Over time, clearly you do need their customers, enterprise customers, to adopt. But we're already seeing like data points, like you've had companies come out and talk about productivity savings. We've got other ones. It's still early days, right? We're still in the experimentation phase. But I think the general signs that people are actually like building with this and working with, I think are still there. So I think it's early. And I think if we're asking ourselves this question 3 years from now, like what is the return, I think we have a problem. But I don't think we're anywhere near that. And for now, I think the demand is still off the charts. They're going to keep selling everything they can make, at least for now.
Howard Silverblatt, he's S&P Dow Jones Indices Senior Index Analyst. Howard, it's great to have you here. And I guess just walk us through the thought process here of why adding NVIDIA to the Dow makes sense at this juncture.
Well, in order to add NVIDIA, obviously you had to take something out. Intel was a difficulty. The issue was in the low 20s, and because it is a price-weighted index, it did not have a material impact on the index when it was moving. Didn't represent the weighting within the index where we wanted to. NVIDIA, on the other hand, even though it is less than the average, stock in there, comes in at about number 22, does better represent the field and has more of an impact on the index. Again, the index is price weighted. As was mentioned, Sherwin-Williams has a lot more weight than NVIDIA, yet NVIDIA is $3.6 trillion, the largest public company in the world. So again, the Index Committee was looking to keep representation in the not just technology within the semiconductor field on there, and it has done that. We currently have about a little over 19.4% of the index weighting in the Dow in information technology. Is the market value significantly more? Yes. If you look at Apple, Microsoft, and NVIDIA, it's over half the actual market value, but the S&P 500 weighting is different than the Dow. The Dow gets market weighted. So those issues, which would be over half if we market weighted, is only about 11%. So again, the weighting is very important here, and the price. And NVIDIA, again, comes in on the lower side of the weightings, but it represents the field and keeps us within the technology where we need to be.
In terms of the inclusion of NVIDIA or past stocks here within the Dow, any impact that will likely have on performance, on perception? What do we typically see?
Some of the attributes definitely change. The PE gets slightly higher. The yield comes down a little bit. But again, the Dow, even at about 1.6% adjusted now, it's about 1.75 prior, is still significantly more than, let's say, the price weighted S&P 500, which is about 1.25. So yields go down a bit. You're paying a little bit higher. But the issues are reweighted at this point in time because you've taken out a low price stock, Intel at this situation, put in higher prices. So it is a material change in how the impacts go. The rule of thumb right now for any issue that changes $1 in the index based on the new divisor and the new setup here is that the index moves 6.15 points for every dollar any issue moves. And that helps in order to figure out who's impacting what. The old number was 6.55, so it's had an impact on those.
You know, a lot of us on Wall Street talk about the S&P 500 and the NASDAQ, but really most of America knows the Dow. So a lot of America is going to be introduced, or at least have to get a little bit more familiar with Nvidia and, you know, all of what Nvidia means in this AI story. You know, Brad, I think the most interesting thing to me is that the Dow, I'm not sure most people know this, but it's not market cap weighted. So Nvidia is a huge, huge stock by market cap. But if you look at its share price, it's still around 150 or so. So it's not going to have as big of an impact on the Dow as it is on the S&P 500 and the NASDAQ. And I think that's going to throw a lot of people off. You're going to see some interesting gaps between the Dow and the S&P 500 on days when Nvidia is maybe rising a lot or falling a lot. So from a nerd's point of view, I think that's really interesting, but that's going to matriculate itself into, you know, how America really sees markets and how they respond to some of the biggest, you know, stories in the world right now. Not many ETFs are based off of the Dow. You know, not many managers are benchmarking to the Dow anymore. Everybody knows the Dow, but in reality, the Dow is becoming less and less relevant on Wall Street. So I think that that's less of an impact that we'll see. You know, I really just think it's a brand thing for Nvidia. Nvidia being able to say that they're part of one of the most storied indexes on Wall Street, even if that storied index is less powerful these days.
With Jensen over at NVIDIA pushing the envelope of technology and Moore's Law, moving from a 2-year cadence to a 1-year cadence, it's very hard to do this. And the supply chain doesn't necessarily move that quickly. And so there are issues that have to do with power, overheating, and that's why there's a need to move to liquid cooling and so on. But we think the ramp, while delayed, is going to happen in the first half of next year. They're in pole position. They may lose unit market share, but value market share in terms of AI, we think grows. Very good situation, but we would not be, you know, trading ahead of the quarter. Very volatile situation.
Very volatile, Hans. So bottom line, you know, when they report this week, what do you expect, Hans? What are you watching for?
Yeah, so we're going to look for, we think, a modest beat, a modest guide up relative to expectations. I think the street got a little ahead of themselves. We're in a transition, right? Hopper is the current generation is growing, but at a moderating pace. Blackwell really a quarter ahead where you see the inflection. So where you're looking for, obviously, top line guidance, overall demand picture for next year, gross margins, very important to see how this ramp is going to impact margins, and the street will focus on that as well. We think everything is okay, but we'll have to wait and see. So margins, top line, and the overall health of Blackwell is something that the street is going to be focused on.
Hans, another of your colleagues on the street has an expectation for 100,000 Blackwell GPUs to have been shipped in the fiscal fourth quarter. What's your estimate, and is that a number that you're sort of looking for?
Yeah, I think that's in the realm of possibilities. That's really an unconstrained type of number. The issue for them and for the company for next calendar year is that they're constrained. And so hitting that number or not doesn't necessarily mean that they're faltering. It's just that demand is very, very strong, and the yields are not healthy enough quite yet for them to meet all of that true end demand. So I think that number is realistic, but can they do that? It might be a bit of a stretch, but That's the way I would look at it.
Any worries about supply constraints, Hans, as you head into 25, when Jensen's out there telling press that Blackwell demand is insane, I think is how he put it?
Yeah, I think that's true, and it's interesting because Hopper, the current generation, was insane, and Blackwell is even more insane, if you wanted to use that terminology. The issue is that there are constraints. The product is very, very tough to manufacture. They tend to sell more at the rack level, and there are tens of thousands of components that are going on there. But yeah, I would say that the demand picture is insane and will continue through next year. The issue is supply. How can you get the supply of the components, the supply of the wafers, the yields, and so on. So it's a little tricky here into the print. And again, we would be a little more cautious into the print because of the volatility. But from a secular perspective, NVIDIA is our best idea without a doubt.
And also, when you talk about the volatility going into the print, again, one of your peers on the street talked about that there's a lot of money that is poured into NVIDIA without necessarily understanding the fundamental dynamics that drive the chip sector, the cycles, et cetera. Does that make it more vulnerable to that kind of volatility that you're talking about?
Yeah, I think so. We have cycles within cycles. And so we think the AI, we call it the mother of all cycles. This is a secular dynamic, is in the early stages. And a lot of the business that NVIDIA does today is still related to training of AI models, not inference. Nobody makes money training. You make money with inferencing or production. So we're at the early stages. And so there is some confusion regarding that. But we think that the stock will work very nicely for investors as we look into the next year, as we move more and more to inference, production, making money, return on investment. That's how you make money here.
I believe NVIDIA is trying to become the hub of the AI ecosystem, very similar to how Amazon became the hub of the e-commerce ecosystem. They're not slowing down, and they're looking to take over all aspects of that ecosystem, not just semiconductors and chips, not just data centers, but ultimately hardware and software as well.
Right, so it's that whole system that they talk about. So let's talk about the market share for NVIDIA in this area right now, because most of the people we talk to say it's kind of NVIDIA and everybody else.
Yes, and they dominate in the chips aspect, and they're not slowing down there. And I'll touch upon this in a minute with respect to Blackwell and Ruben. But how about their data center business? I bet we see more explosive growth in their data center business going forward as well. And data centers are so critical to AI because they're the nervous system. They power all these intensive AI calculations. But they're getting stretched now because they have to look for alternative sources of energy, which is now delving into natural gas and nuclear energy, not just electricity.
What's next, right? Because the market is always asking that question.
And so is NVIDIA. So we know next year they're going to come out with the Ultra version of their Blackwell chip that they just debuted this year. 2026, they're coming out with the new generational chip called Ruben. 2027, the Ultra version of the Ruben chip. So they're not being complacent. They're not resting on their laurels. They're continuing to power ahead, and I think they're going to continue to gain market share as a result. Whatever market share they don't have already.
Right. I mean, all of that said, they're not without risk, of course.
Certainly.
So let's run through some of the potential pitfalls here. First of all, there's the overheating issues, and we heard once again some reports of that yesterday, that they were kind of struggling, especially with the largest arrays of chips. When they put, I think it was 72 of them together at once, they do struggle with this issue.
And it's not just an NVIDIA issue. Remember, these chips run hot. The data centers run hot, so they need cooling solutions as well. That's why you see companies like Vertiv Solutions or Modine Manufacturing actually rising in terms of their stock performance because they provide the cooling solution to the data centers that employ these chips. So I think that problem will be resolved, but continue to look for other chip makers having similar overheating issues.
Gotcha. And then the valuation, which you can't ignore after the run that they have seen.
Yeah, I mean, they're currently trading at 64 times current earnings, 36 times forward earnings. I kind of like that forward earnings number much better. 36 seems more reasonable, but it's hard to bet against NVIDIA right now. I think you could find an attractive entry point that's a little better than where we are today, but you might not get that after tomorrow, at least over the short term.
NVIDIA CEO Jensen Huang first unveiled the Blackwell chip back in March, calling it a
very big GPU, and it is quite literally that. Blackwell is NVIDIA's most advanced graphic processing unit that has the ability to run 2.5 times faster than its predecessor Hopper in training AI. And that speed is critical as these AI models get larger and more powerful. Now, to understand the complexity of what NVIDIA is developing, we can look at the makeup of the most advanced Blackwell chip. It is made up of 208 billion transistors. These are tiny switches that make these chips work. Its closest competitor, AMD's MI325X, has 153 billion transistors. And that count is important because it points to just how much these GPUs can process at any given time. Now, when you combine the specs, the Blackwell chip is 5 times faster than its predecessor when it comes to inference, the process of AI models using to draw conclusions from new data. And when it comes to energy efficiency, it is 25 times more efficient than NVIDIA's previous chip, Hopper. All of this is in one Blackwell chip. But what makes this chip attractive is its ability to build out a super chip known as the GB200. It combines 2 Blackwell GPUs and 1 Grace CPU. Now, NVIDIA has designed customized server racks that allow AI companies to combine 72 of those GPUs on racks stacked on top of each other. The company has promoted that as the best way to connect the chips to get the fastest performance. It is the reason why you've got Meta, OpenAI, and Microsoft among the companies that have put in massive orders. And for some context, those 72 GPU racks combined weigh 3,000 pounds stacked on top of each other. It is taller than the average refrigerator. And you've got Jensen Huang saying there is huge potential in terms of revenue for this, guys.
We certainly have been hearing that from Jensen, but we've also been hearing about some issues reported with Blackwell overheating. How quickly can NVIDIA ramp up its supply given some of those issues we've heard?
Yeah, Maddie, that's certainly going to be the key question investors have going into that earnings call tomorrow. It was just yesterday the information reported new overheating issues stemming from those server racks, and that came after the company delayed the production and delivery of Blackwell by at least 3 months because of some design flaws they uncovered. Now, all of this points to just how complex these chips are. But there is significant upside potentially here for the company. Jensen Huang has said that this is a market that will start at $250 billion annually. And when you ask investors on the street, there's a difference of issues, or I guess opinions, in terms of how significantly this can ramp up. Piper Sandler's Harsh Kumar says there is potential for NVIDIA to pull in $5 to $8 billion of Blackwell revenue in the January quarter. Raymond James analyst Srini Pajuri cautions the ramp up may take a little longer. He expects NVIDIA to ship 100,000 Blackwell GPUs in the fourth quarter. That would be at the low end of investor expectations, but he still has a strong buy rating on the stock here. So that just points to the potential upside that investors see coming through from Blackwell. Guys, the question is just going to be how quickly they can ramp up, when those deliveries will really start to accelerate.
So yes, I would just reiterate that NVIDIA printed a strong third quarter, with a solid 17% sequential growth for data center. That's above expectations, and the guide for 4Q was strong as well. That implies another 10% sequential growth. And on one hand, you have demand for Hopper that remains very strong, broad-based. You have, H200, NVIDIA's latest Hopper GPU that's ramping very well. And on the other hand, you have the Blackwell ramp that's very much on track. NVIDIA, is planning to exceed its previous guide of several billions in 4Q. And most importantly, demand is set to exceed supply for several quarters in 2025. Now, the key debate is what happens in 25, right? And on that front, I think I would say 2 things. First, there are no signs of overcapacity building for GPUs. On the contrary, you have all the latest models like OpenAI's O1 with a chain of thought putting pressure on compute requirements. That's driving very strong demand at the moment. And we also monitor very closely hyperscale capex, and hyperscalers are indeed on a trend to spend enough for NVIDIA to beat next year. And the second thing is really NVIDIA's supply chain and all the data center power capacity that is increasing at a very rapid pace. And so you have NVIDIA who is carefully allocating clients based on power capacity. So that's really unlikely to create like a bottleneck at an industry level next year. And so here, the conclusion is that there is no bottleneck preventing NVIDIA from meeting its expectation, from meeting consensus expectations next year, and even buy-side expectations as well, which we estimate, maybe are in the $200 billion for data center. So bottom line, yes, is NVIDIA is very well positioned for 2025. They're set to generate, over $4 of EPS. And even if we expect growth to slow materially beyond, we still see NVIDIA approaching, $6 of EPS. And how do we value that? Well, over the last 10 years, NVIDIA has traded on 38 times forward earnings. And so if you put like a 35 multiple on these $6 of earnings, well, and you discount that back to today, that still, gives you quite a bit of upside. And that's how our $173 target price is based on.
So Antoine, it sounds like you think investors should be using any sort of pullback as a buy the dip opportunity.
Yes, I mean, the stock actually ended up opening in the green, right, this morning. But yes, we would definitely have recommended investors to buy on any weakness. If you look a few years out, I think, we have a lot of data points that are increasing our confidence that a lot of compute demand is going to be required, You have that was a big debate on the call, that compute is now shifting from pre-training to reinforcement learning. Like the pre-training phase is when you take all the text on the internet and you teach a model how to make sense of it, of all the data. And there has been some concerns lately that there may not be enough data to keep increasing the performance of models just by doing that. But thankfully, researchers at OpenAI, Google, Anthropic, and elsewhere have found new ways to improve the performance of model by having the model speak with itself or with other models. And you can increase further the performance by having the model spend time, at the moment you ask a question to it. That's kind of analogous in some ways to what we do when we spend a few seconds thinking before we answer a question. And all that will drive very significant compute demand in coming years. And that's definitely like the underlying reason why we would be buyers of any weakness here.
Antoine, you've got calls on the street like that from Wedbush saying that this is the LeBron James of AI right now. I mean, is that a fair analogy? Is there some other analogy we should be thinking of? Do you think this is the LeBron James of AI?
So I'm not a big expert in basketball, but what I can tell you is that in the field of AI infrastructure, NVIDIA today leads, and they lead for two reasons. The first reason is because they have a very, very strong ecosystem. They've been around for a very long time. They know how to tackle these AI workloads very efficiently, how to find every bottleneck in the workload and develop solutions, chips, and systems that can address these bottlenecks to take model performance to the next level and allow to make a better and better model as we move from one generation to the next. And second, yes, their chips have much more flexibility than what other AI XPU, like you have CPUs, you have GPUs, you have TPUs. So GPU is one category. The GPU is a very flexible architecture. It allows, to tackle future workloads, even if you don't know what the future workload is going to be. And so those are the two main reasons, today why we see NVIDIA as a leader in AI and we expect them to remain so. That doesn't mean, of course, that there's not going to be a market large enough to make room for other vendors to do very well as well. And there you could mention Broadcom, you could mention AMD, but we definitely expect NVIDIA to remain dominant.
NVIDIA CEO Jensen Huang telling analysts that production for the company's highly anticipated Blackwell chip is, quote, in full steam, but demand still outpaces supply.
The supply chain team is doing an incredible job working with our supply partners to increase Blackwell, and we're going to continue to work hard to increase Blackwell through next year. It is the case that demand exceeds our supply, and that's expected as we're in the beginnings of this generative AI revolution, as we all know.
Yeah, I mean, I think the big thing is they're going to be up against a lot of supply constraints, just because we are working with an advanced manufacturing process for Blackwell, and from that regard, right, TSMC is scaling a new process in terms of advanced packaging. So as that ramps, I think some of those supply constraints will start to ease. But the bottom line is, just from the demand we see from the hyperscalers, we talk to a lot of people in cloud. We talk to a lot of CIOs and CTOs investing in these enterprise AI workflows. We're confident there's going to be a continued demand cycle here for at least the next year, if not into calendar 26. And I would expect that NVIDIA remains just supply constrained throughout that time, if not longer.
Do you expect the spends or the purchase orders that they're receiving from their customers to remain at the same level? And I guess I ask that because we're seeing this demand really show up in even some of the larger kind of S&P 500 targets that we're seeing from banks and investment firms as well, who are talking about the level of spend that AI is expected to receive over these next several quarters.
Yeah, I think the big thing there, and this is just reflected in the hyperscalers' capex increase in their spend, is when you just look at the demand today for AI, this is a large amount of organizations just piloting and doing projects. So this is not being deployed yet to every person in their enterprise, nor is this being deployed to every person on the planet with a computer who are using these functions on a regular basis. So that's why you look at this and say we are in the very, very early stages of a transformational moment in computing, and the vast majority of data centers are not AI factories, as Jensen likes to say. We are in the midst of an early transition from general purpose servers, which things that just run the internet, Walmart.com, Amazon.com, Netflix, et cetera, to these AI servers. And that's single digit penetration in terms of the general data center now. So we have a long ramp of spend as they start to transition those data centers from general purpose servers to AI servers. And NVIDIA is going to be one of the main beneficiaries of that over that timeline. And that is a 2-3 year arc if you just look at where capex is today.
Ben, how are you looking at valuation? Obviously, valuation concerns we have seen creeping into the market. Do you then think it sounds like maybe the valuation is justified given that opportunity that lies ahead?
Yeah, I think it just goes back to the point as to what happens when enterprises and really every service company starts deploying this at scale, because it's not today. And once we start seeing this move into full deployment, which if you read a lot of commentary from CIOs and CTOs in terms of their spends with their budgets, that's going to be mid to end of next year that they expect to start rolling out those broader AI projects at scale. And that's not even to their entire enterprise. That's to Salesforce. That's to marketing, that's to engineering for coding. Once this really fully moves out to really every knowledge worker, if you will, and really beyond, like the scale for that is going to be significant. And so I think we'll start to see those ROI justifications, those spends start to move to software on that timeline, again, mid to late next year. But we're in still this just build infrastructure stage here. And it's still going to be a multi-year cycle of infrastructure build.
The growth is still huge there. I think it was 94% up year over year for overall revenue. I think maybe 112 for data center, if I recall. So they're still absolutely exploding as far as the growth goes. There's no doubt that the growth is on a incredible upward trajectory still. It's just not the insane stuff that we had seen at the very, I guess, takeoff of the generative AI revolution, if you want to call it that, or the big kind of blow up with generative AI. But I think the main takeaway here for me is that Blackwell seems to be in perfect shape as far as Jensen Huang and CFO Colette Kress say. They say that Blackwell's in full production in the hands of all of their major partners. They shipped 13,000 sample Blackwell chips in the quarter. And we had them say that the NVIDIA is on track to exceed previous Blackwell revenue estimates. So Blackwell clearly doing very well. Jensen Huang saying that it's in great shape, that they continue to be on pace to execute on their annual roadmap. That's as they go from Blackwell to the next chips, and that their Blackwell production is full steam, and they will deliver more, as I said, this quarter than they previously estimated. So Blackwell seemingly doing great. The kind of concerns over overheating, the issues with the mass procedure are kind of in the rear view, and they're just kind of plowing forward. The overall revenue numbers were obviously very, very good. They came in at 35.1 billion versus 33.2 billion in expectations. The anticipated revenue for the current quarter, now Q4, is 37.5 billion plus or minus 2%. Wall Street had that pegged at 37 billion. So it just looks like Wall Street's getting more on track with what the expectations are for the coming quarter.
Do you see NVIDIA as the biggest beneficiary here of incoming investment into AI infrastructure?
We do. We would agree with that, and thanks for having me on. NVIDIA has built a moat around AI infrastructure and AI compute, and you know, I think investors are still, to a certain extent, thinking about NVIDIA as a semiconductor company, a company that sells GPUs, and really it's evolved over the last several years into a systems and solutions company. And that's important because AI infrastructure is dependent not just on compute, which is, you know, today driven by these accelerators and mostly GPUs that NVIDIA is providing into the marketplace, but also networking the GPUs together, which is really important as you think about large language model training, and eventually we think inference applications and workloads. And very much important here is software as well. And NVIDIA has been in the game of making GPUs easier to program, building algorithms and models around that programming language, and you know, underneath this operating system that they've been shipping into the marketplace since 2006 called CUDA. And when you put that all together, it is in our view, a very, very complex moat that is going to take years, I think, to catch up to. And so as we see this massive investment cycle with cloud service providers increasing their capital expenditure forecasts every quarter, really, to keep up with AI and demand for AI compute, and we think NVIDIA really flushes out as the biggest beneficiary.
Where are the sort of pain points? Where is the tension in making enough of these Blackwell chips to get out the door and meet the demand?
Yeah, so NVIDIA's largest supplier, right? There's wafers and there's packaging, okay? Wafers are the chips or end up becoming the chips, and then you have to put them in a package to do what they do. And TSMC is maxed out on the amount of wafers that they can produce on their leading edge. And they have a monthly report where they have consistently said, we are sold out, we are adding capacity, but it takes years to add more capacity. A different type of capacity challenge has come out over the last 2 years, and that is in these packages. And for those who are following along, it's called CoWoS, which is a special type of package. And you have to build entire factories just to do the packaging. So the wafer has to connect with the packaging to ultimately get the cards out and to get those racks out. As we've seen in chip world, it takes years. You had to have had invested years before to make sure that you are ready for today. I have confidence that for the next 18 months, the likes of Meta, Amazon, Google, and Microsoft, and the tier 2 cloud service providers will continue to gobble these up. And the primary reason is the fear of missing out. Every one of these companies is afraid of missing out, but they also see on the plus side the opportunity, maybe the opportunity to apply co-pilots to enterprise SaaS, which potentially impacts these enterprise software companies, the ability for consumer companies to be able to either lock in the lead that they have or make more money on advanced services. And until investors start crying foul on capex, and I don't think that's going to happen until one of these hyperscalers starts to have profitability challenges, this is going to go on for at least 18 months. Interesting conversation I had with NVIDIA CFO Colette Kress. I asked her, well, how long does this go? And this was not just the hyperscalers.
and I'm paraphrasing, this could go on for a decade.
You can see the huge gains that we've seen quarter over quarter in terms of their announcements. And I liked this chart because this came up in NVIDIA's presentation, but it wasn't part of the 10Q or their financial statement. So we got a little bit more intel in this chart that they included in that presentation here. You can see here Q4 fiscal year 2024, this was an increase of 57% in their cash flow from operations from the prior quarter. It was up 411% from a year ago. So huge gains. No surprise to hear that coming from NVIDIA. They defined this in that presentation, by the way, as their cash coming in minus their debt. As a reminder of that, they've got $26 billion in gross cash right now, only $9.8 billion in debt, leaving them with $16 billion in cash. So certainly seen their higher revenue that didn't necessarily blow out expectations, but did still beat them, reflected in this chart here. Now, another thing that I thought was interesting, like you mentioned, Brad, those share repurchases coming in at $2.7 billion. Also, the dividend payments coming in at $99 million, so just shy of $1 billion there. As that continues to pick up, maybe that area that they can play with on their balance sheet in terms of how they're using their cash could be used to sort of outweigh any super lofty investor expectations moving forward. Maybe that's a way that they could lead to some joy from the street following their earnings prints if, say, we don't see a massive expansion in revenue coming from outside of those 4 hyperscaler names.
Nvidia, the company's data center unit, its biggest division so far, seeing revenue double from a year ago to just over $30 billion, $30.8 billion during the third quarter. That's more than the combined revenue of its rivals Intel and AMD. Our next guest predicting that Nvidia will continue to lead the data center GPU market, but seeing more room for the AI juggernaut to expand. Let's talk about that with Olivier Blanchard of Futurum's group, a practice lead for devices. Olivier, great to have you here. So talk to us just about that demand and what you see as that growth opportunity ahead.
Hey, good morning. Thanks for having me on. Well, I mean, it's kind of the same story we've been telling for the last year, 2 years, really. Is we're in the middle of an AI transformation, a huge disruption. NVIDIA came in early with really the right types of products and the right roadmap. So they gained early momentum and early scale, and now they're just building on that ahead of everybody else. And primarily, it's also about the number of GPUs versus the number of CPUs that you need to run these workloads in the data center. It takes a lot more GPUs than CPUs. So by virtue of that fact, NVIDIA has an advantage just in terms of the numbers. But on top of that, they just have a really good product. They got there early and they were able to scale. So now it's just it's gravy from here for a while now for them.
When do you think people will start to be more comfortable saying we're not going to use NVIDIA as much as we're using Trainium from Amazon?
So there's a couple things going on. One thing is, I've used a metaphor. You used to say in IT, you'd say, no one ever got fired for buying IBM. Now you actually might get fired for buying IBM. No one's getting fired for getting NVIDIA chips, right? So if you can get the NVIDIA chips, if you're Oracle and you want to build up data centers to compete with Microsoft and Amazon, you go get NVIDIA chips, right? And so we see that happening here. I'm really curious about what the partners of NVIDIA are going to say to NVIDIA 3 years from now, saying, hey, remember when you took your gross margins from 46% to 79%? And you made us pay all that when we couldn't go anywhere else? I mean, wonder if that's going to create any bad feelings among customers. I've certainly heard nothing. And I asked this question to a lot of the customers, the people buying these NVIDIA chips, the people putting in orders for Blackwell, and they're not mad about it. But they're spending billions to get those chips.
Well, and so that leads me back to the question that we've been asking now for a while, which is what are the alternatives and what is going to cause people to turn to alternatives? Because is it going to be cost? Is it that I don't really need that chip necessarily for my needs? It's too much car for me, to use another metaphor, right?
So we certainly see a lot of development. We've counted over 50 startups that have received, I think I figured like over $3 billion in funding in the last year to create new semiconductor companies. One, Grok has gotten a lot of attention, multi-billion-dollar private market cap right now. There's a company called Positron that I've invested in that is already shipping a product, and they've done it with a lot less money. They're doing it with chips that are going to cost a lot less money, and some of the performance standards are actually beating the Grace Hopper right now.
But are those chips on the market yet? Are customers buying them yet?
They're starting to. And I think that we're going to see more of that. AMD is starting to make some inroads. We see that from AMD and what they're telling us their sales have been. And that's one of the reasons that NVIDIA is rushing so hard. I mean, there was a lot of conversation on the conference call and afterwards about this is a Q4 event, calendar Q4. They're in their 2026 fiscal year already. But they've already shipped, I think, 15,000 Blackwell systems. So they're out there in the marketplace. All their main customers have them. So tick off their main customers, right? You've got Microsoft, certainly. We've also got Amazon. We've also got Facebook, Meta, and now we've got Oracle. Also, they don't name it in the financial filings or in their conference call, but a new one showed up in their 10Q showing a new customer that's over 10% revenue. And we think that's Oracle.
Brent, I'm just curious, we all saw these headlines today, China opening this antitrust probe into Nvidia. To be honest, Brent, there were some analysts who were saying, listen, they actually weren't surprised. When a company has 90% plus market share in a hot market, regulators do tend to come knocking. But I am curious what you made of that.
Well, I think we've seen similar anti-monopoly brought up against other Western companies in the past that usually leads to some sort of fine. It could be that maybe the Chinese policymakers picked up a copy of Art of the Deal and they're using a significantly widely held U.S. company that does a lot of revenue in China. More than 10% of Nvidia revenue is in China. Maybe this is one of their leveraging tactics going into what we believe will be fruitful negotiations between the U.S. and Chinese government to sort out some of the trade some of the trade deficit, some of the unfair practices maybe in China. So maybe this is a little bit of the Art of the Deal from the China side.
Nobody should be surprised to hear about an ongoing set of probes against NVIDIA, especially coming from China. Now, there's sort of two sides to this one. There's the first, which is the more ongoing microaggressions that exist between Chinese and US firms. And of course, as China continues to struggle to keep up with the most leading edge advanced AI chips, they probably want to do what they can to slow US firms down. On the other side, China's talking about a 4-year-old commitment that came from NVIDIA to make sure that Mellanox, which is the networking technology that they've bought that's really enabled NVIDIA to continue to create differentiation in these systems that they're building, and saying, hey, is NVIDIA helping enough with Chinese-made chips and using this networking technology to advance what China is doing? And of course, that's a challenge too, because China is so far behind right now due to a combination of controls, a lack of the materials and technologies to build the most modern AI chips. So I think what we have here is really more of a macro geopolitical strain than a real probe. But NVIDIA is so successful that they're going to get probed by every regulator in the world over the next few years.
What type of exemptions are you anticipating, and what even quantifiable pullback could be on the table if we were to see this play out in a broader kind of tit for tat that impacts some of the largest US companies that have the most revenue exposure to China?
Yeah, I mean, we've already seen a little bit of this play out in the real world. We've seen Micron get significant challenge from China. That impacted revenue substantially. And before that sort of big high bandwidth memory pivot that happened over the last year with AI, it really harmed Micron. And then, of course, we recently heard some probes into Intel and the business that's going on with Intel. And of course, we know Intel has been in a delicate position. So NVIDIA is a little bit of a different play. And there's been this ongoing sort of moving target of creating these scaled back AI chips that could work in the China market. But recently we heard, anything below 7 nanometer, they were going to cut off through these new export controls. That's basically every chip that's been designed recently for that market. And so you're talking a multi-billion-dollar impact, double-digit % revenue for NVIDIA, not as high as some companies. Others like Qualcomm have even higher exposure, but we expect this to continue to play out. There just is no circumstance until, over the next few years that, China and the US aren't going to continue to strain, because AI is not just about this technology. It's really about global economic and defense leadership. And the US doesn't want to weaken its position.
Obviously, everyone now is obsessed with NVIDIA, Tay. But you started looking into this and started working on the book just before the sort of most recent explosion in the shares and in interest. So talk to us about how that sort of came about.
Well, I just got lucky. I got a cold email in my inbox of May of last year as an editor from Norton, and he said, oh, I know Matt Ball, he was the author of ours, and he recommended you to write the book. And the first thought I had was, there has to be a book on NVIDIA. I went to Amazon, looked it up, and there was none. I was stunned. Like every other big tech company has 4 or 5 books, and for some reason, no one has written a book on NVIDIA. And even at that time, it was still the biggest chip company in the world. It had some success. And then, boom, a few weeks later, they had one analyst called the biggest upside quarter he's ever seen in history. And then we've had these 5 or 6 quarters where they're growing triple digits at a revenue number that has been unprecedented in the history of the computing industry. So it's been quite a ride. I've been lucky to talk to all the early senior management, employees, competitors, and everyone is thrilled to tell this story because it's one of the best stories in American business history. There's no doubt in my mind about that.
What do you think explains NVIDIA's great success? I mean, as you say, one of the great stories, right, in American, entrepreneurial history. What is it? Is it Jensen? Is it his leadership? Is it the culture?
It's all of the above. You just nailed it. We have this extraordinary outcome where NVIDIA is literally the best performing stock in US history with any company with 20-year returns. If you put in $10,000 at its IPO in 1999, it will be worth $40 million today. So what explains that? And you nailed the key hallmarks of it. And it's the culture that Jensen was able to create. It's the work ethic. I have this story in the early 90s where this one employee, she worked after midnight and said, oh gosh, and she slept for 3-4 hours and then woke up at 4 a.m. And she was thinking, oh, I want to go back to bed, but no, I have to go kill Intel because Jensen just gave an inspirational rally cry that we must kill Intel because they're out to get us. And this is when Intel was trying to snuff them out. The second component is the talent thing that you said. Jensen is obsessed with finding the best talent. He will interview someone, ask them, who are the best people you work for? And people will just tell him. He will pocket that memory, and 2 years later, go after that person and recruit. And he's relentless. He recruits the best people, and they usually say no the first time, but eventually he gets them. And he's also great at retaining people. NVIDIA, if you look at their annual filing, their turnover is only 3%. They retain a certain type of people. I'll call them mini Jensens, who love, Jensen is wealthy beyond his wildest dreams, right? But he still works every day of the week, crazy hours. He's working Sunday evening with his Highland Park Scotch, drinking, reading hundreds of emails. These are people that, wealth is great, but they're driven by a passion to work, and it gives them satisfaction. He loves working. He says working is relaxing. When he goes to a movie, he doesn't remember the movie because he's thinking about work the whole time. So all these people, all the senior management teams, a lot of them have been there for 25 years. These are people that are driven by the mission, they're driven by the passion, especially now. In early days, it was mainly video game PC chips. Now it's the AI stuff they're doing is changing the world in every single sector. One real big sector that Jensen is most excited about is the potential for AI and digital biology. So this is stuff that could possibly cure cancer. This is stuff that really changes the world. So that's how you retain people, if you have a mission and passion to do that.
Tay, I do want to ask you, it's not as though the road has been easy, right? There have been obstacles. The latest obstacle could be China, right? And the company has sort of negotiated and offered lower advanced chips in China to try to avoid some of the regulations. But the latest reports that they could be facing an antitrust investigation in China. Given what you know about the company, what you've learned, how do they attack issues like that?
I think NVIDIA will just have to listen to what the US government tells them to do. The US government has put in restrictions on their most advanced GPUs, so their revenue has already gone down a lot. Most analysts are kind of zero-outing the China revenue.
Business.
Yeah, because their best, fastest chips, they can't sell in China anymore.
Right.
So I think part of this is just China thinking of this as theater to kind of strike back at the US, but China wants NVIDIA's chips. They want NVIDIA's most advanced chips. So it's kind of what are you going to do? Their chips are already banned. The high revenue stuff, the best stuff is already banned and restricted for export is the technical term.
Right.
So I wouldn't work, it's already happened.
Since election day, NVIDIA is down. It's in fact now down well more than 10%. It's getting closer to 11, 12%. The rest of the Magnificent Seven, all of them have been higher. So if you look at that ETF that tracks the Mag 7, it's up. If you look at each of them, especially Tesla, which has far and away been the winner. They're all up. Nvidia is one of these things is not like the other situation.
And we spoke recently to Nancy Tengler, who a very smart investment strategist and Nvidia bull, and I was asking her about this and what sort of she thought explained that, and I bounced one idea off her, which is, could it be in part that there's a product transition occurring at Nvidia? Could that help explain some of the weakness? And Nancy basically just told us that she just thinks the market has a short-term memory. She actually told us she was using this weakness to add to their position over there, because I think her bottom line to us was, Julie, she looks at Gen AI spending and it's still going very strong, and her bet, like a lot of folks, is if that's true, then Jensen Huang is a beneficiary.
Well, the sort of new hotness over the past few days in the market has been Broadcom, in contrast to Nvidia. It was up 24% on Friday following its earnings. It's up again today by double digits. And yes, the reception to Broadcom's numbers was impressive from analysts. However, what's interesting is if you look at the outlook for next year, you look at a Stacy Rasgon from Bernstein, you look at a Vivek Arya from Bank of America, they like both stocks going into 2025, both Nvidia and Broadcom.
For all of the buy on the dip mentality that we've heard over the past several weeks, for this, the poster child of AI, it'll be interesting to watch how many buyers certainly enter back into, and what type of flows we see into Nvidia, even off of some of the pressure that we're seeing right now.
Yeah, I think when you take a look at where we are here today, right around 130, the next critical level to watch, what I've been seeing here from a lot of the notes out this morning from the technical side of this equation, is 100-day moving average, which is right around 128, so just below where it looks like we are here in the pre-market. I think you got to take a step back and take a look at what is driving maybe some of the concerns. Remember, though, this is a stock that's still up over 160% year to date, so it's important to put that in context here. But we're seeing a lot of favoritism, or a lot of, I guess, money flowing into one of its competitors. When you take a look at Broadcom,
what we're seeing in Nvidia right now, it's a correction. I mean, it is 12% off its highs in November. For the layperson out there, what's happening, and what do you think is driving the sell-off?
Sure. I think some of these are company-specific forces, and some of these are market forces. So if we start at the top, what we have seen in the market is a rotation of money from semiconductors to software. Semiconductors are more China exposed, software is less China exposed. So we have something that is a market force. Then specific to the company, the last 2 quarters have not been clean, really because they are going through the growing pains of from one generation of product that was Hopper to the new generation of product. And if I go to where we had the most amount of enthusiasm was back at their GPU technology conference in March, right? At that time when Blackwell was rolled out, I think that sent a very powerful message that, to your point, this is the most powerful product. This is going to be the most innovative product, right? And since then, what we have seen is just execution, issues, keeping it out of the hands of customers. So 1 quarter, there were issues with the mask, right? Now they have been resolved. 2nd quarter, there were just issues in rolling it out in different system level configurations, right? Now that is also going to be resolved. But we have now had a period of 2 quarters where it is very unlike Nvidia to have these execution question marks, and where estimates have not gone up the way they were supposed to. Now, in our view, these are short-term issues, right? That they will start shipping Blackwell from January, right? And some of these gross margin issues, they will start resolving by the time the product is shipped for a quarter or 2, because then they have scale, they are able to absorb a lot of those upfront costs. So we think it's a matter of waiting another 3 months before some of these product issues get rolled out. And meanwhile, when we look at the stock, it has now come down to levels where it generally starts to bottom, right? Every time the stock has troughed over the last 3 or 4 times, it's been about 25 times or so next year's earnings. So if you look at next year's earnings, which are headed towards $5 or so, the stock is right around those levels, right? So I would summarize it with some market forces, rotation of semis into software, and we have clearly seen the software indices outperform the semiconductor index, right? For a while there, semiconductors were grabbing all the attention. We felt very good about that, but now it's time to share some of that attention. And some of these have been company issues, which I think will be resolved in the near term. I think in some ways, what they are trying to do is put what is essentially a lot of Nobel Prize winning physics into high volume manufacturing in a space of years. Easy stuff. Exactly, in a space of years. Secondly, the Nvidia of old had to work on chips and boards, Now they are working on chips and boards and systems and racks and software. So many components have to come together. So in the past, they were worried about putting 1 or 2 GPUs in a server. Then that went to 8 GPUs in a server. Now they're trying to put the most leading 72 GPUs in one rack while putting switches and cables and connectors.
How do they even do this?
So that's exactly the thing, that the scope of problems has gone up. And then they're not the only one that is in the equation. Right? You have people who are running the data centers. They need to get things like liquid cooling ready. They need to get the data center ready. So it has become a very, very big project management, operational, and execution problem. So the whole supply chain, all the stars need to align all at the same time. So for them to slip things out by 1 or 2 quarters is not extraordinary. Perhaps in hindsight, where we might have gotten complacent, is right after their GPU technology conference when they announced this product. We thought it would be perfect execution, right? That just because they have announced it, it means it's ready to roll out the next day.
Execution from NVIDIA.
Exactly.
The way that NVIDIA got big was they started investing early in AI when everybody thought that CEO Jensen Huang was, just a madman for doing that. They were trying to shop around ways to make the AI kind of capabilities work. And then generative AI came around and they started just kind of riding that wave. Along that, they had built their CUDA software so that they could unlock the graphics card capabilities to run other programs. And so that's gone hand in hand with the hardware. And now developers like to use the CUDA software, or they've already built their applications on the CUDA software. And so moving over to a different kind of platform would be too much. And so they're sticking with it. And they've managed to keep doing that and keep improving. Now, for 2024, I think the big deal has been the Blackwell chip. They announced that at their GTC conference earlier this year. That's been the thing that everybody has been piling money into NVIDIA over, just because they know that it's where all of these hyperscalers, the Microsofts, the Googles, the Amazons, the Metas, the Teslas, are all going to go ahead and purchase to ensure that they have the best capabilities for their AI models, whether that's training, which is the hard part, or inferencing, which is less intensive. They've just managed to hold on to this place. They own anywhere, I think the estimates are between 80% and 95% of market share. There's competitors out there, but they're just not breaking through. And so because of that, NVIDIA has managed to completely dominate 2024 again. Now, okay, what does that mean going forward, right? There's AMD, there's Intel. What does that mean for them? Well, not too much.
And this is not the end of the world for NVIDIA, but it's under the microscope because compared to the other magnificent stocks, it's the only one down since November 1st. But NVIDIA historically is still up 130% for the year, let's not forget that. But it has had 3 20% retracements just this year, 35% when you go back to the Japan yen carry trade. We're down about 16%. If it was to get back to its 200-day moving average, we're talking 24%. Technically still in a long-term uptrend, but near term we're seeing what we call a head and shoulders top. We're watching that 130, 131 level carefully. It breached it yesterday. It's recapturing it today, but it has to recapture that 50-day moving average. But we saw this exact same thing play out last year, where it consolidated over the second half of the year before leading us higher. So while everyone's a little upset that it's not participating in the party with the other Magnificent Seven, and Broadcom broke out and leading it in the chip space right now, I'm not worried over a long term. In fact, I think it's setting up for another buying opportunity. If this head and shoulders top plays out, you want to back it out. Look at a weekly chart. It's been up above its 200-week moving average since January 13th, 2023. And if it pulls back, we're looking 110, 115 would be a great buying opportunity because the fundamental story hasn't changed. Nothing has changed there. And I think you're going to talk about it a little later on in the show. So to me, this is just a pause, but we're focused so much on it because, one, there's a little negative topping pattern that you have to be watching. And if it does break, your target is 110, 115, and that would probably be a great buying opportunity.
Product of the Year award going to NVIDIA. Really, it was a hands-down favorite right out of the block with our editorial leadership team. It was going to Blackwell. Three reasons why. You can see a lot of those reasons here. One, based on all the reporting that we have done for this award, it became very clear that Blackwell is the leader. It is the clear leader in the AI chip race. Sure, you have AMD. Intel's been trying to do something in chips, trying to get into the AI space, chip space, but it is Nvidia that still has its lead in large part because what is about to come with Blackwell. And then what is about to come, the interesting thing here with Blackwell, it has already developed a backlog of billions of dollars in related sales that Nvidia will start to drive home next year, really start to influence its top and bottom lines. And why it's generating those sales, of course, guys, is because they are the leading player in building out the AI infrastructure. You put all these things together, Maddie, and you really get the sense it was a Blackwell type of year, and it will be more of a Blackwell year next year as this chip gets in the hands of customers.
I will mention one of the ironies of this being picked as the product of the year. The thing didn't ship till the fourth quarter, right? But there has been such anticipation and such demand from the hyperscalers to get it to power their data centers and their large language models that's why we named it the product of the year. So if you look at some of the specs on this chip, and listen, I am not necessarily a semiconductor expert, but the numbers sort of tell the story here. So it has 208 billion transistors. That is more than 2.5 times that of Hopper, which was the predecessor chips. And then there's something that NVIDIA talks a lot about, and other chip makers too, which is the so-called total cost of ownership. Blackwell is expensive. It is the most advanced and therefore the most expensive GPU on the market. However, NVIDIA argues that because it is highly energy efficient, the total cost of ownership over the lifetime of the chip makes more sense. And then it's not just Blackwell that NVIDIA is selling, it's really a whole computing system. So it combines with the Grace CPU for a full rack of computing power. That's what's going into these data centers. It is the largest GPU ever made as well, we should mention, and it's made by using two die, basically two chips that are connected by a high bandwidth interface. That was one of the leaps, the innovation leaps that NVIDIA made in developing the chip. You can see what it's already done. Well, if you look at the revenue growth that we have seen for NVIDIA already, as I said, Blackwell didn't actually ship till the fourth quarter of the year. So a lot of this is demand for other data center chips like Hopper, what we've seen thus far. But the real surprise began for NVIDIA not this year, but last May when we had that big upside surprise in revenue. And then the company's revenue has just continued to grow here, although at a somewhat slower rate the bigger it has gotten, Maddie.
Yeah, that's certainly been a question we've been talking about, is the decline, or slowdown, I should say, in the profit growth estimates moving forward. Given that, and what we've heard this week from Broadcom, what are your sources telling you just about the path forward for NVIDIA and whether Blackwell will be enough to keep NVIDIA as the leader?
So let's be clear here. NVIDIA is still absolutely dominant in this space. When I talk to analysts, I talk to Ben Beheron, I talk to John Vin over at KeyBank, and they talk about 80% plus of the control that NVIDIA currently has on this data center generative AI LLM market, right? So they are hugely dominant. And when you look through the next year, Vin said, as long as they can solve some of their manufacturing bottlenecks that they have had and get the flywheel going, then they'll be fine. Yes, the revenue growth is expected to slow, but again, that's because they're coming from higher and higher numbers, and demand doesn't seem to be of a concern. The competitive threat is going to come from custom chips, most likely. AMD, yes, but Broadcom, as we've been increasingly talking about, got a lot of attention in its most recent report, talking about the increase in demand for custom chips. But again, when I talked to analysts, they said the custom chips aren't there yet. They are not yet competitive.
A report from The Information detailing how NVIDIA could build a cloud business that would rival the likes of Amazon Web Services. The chipmaker says it could generate $150 billion in revenue from software and cloud services in the long run. CEO Jensen Huang has said that cloud and AI software will be a very significant business over time, and the company is on pace to generate $2 billion annually from selling just software. If they did expand into the cloud business, that could be a huge headwind for Amazon, which has been the cloud giant in the room for so many years here. I believe Amazon Web Services makes up nearly 20% of Amazon's overall revenue, and a significant portion of that is in the cloud. They've had this sort of co-opetition relationship with NVIDIA, so if they do start to eat their lunch, I can't wait to see The claws come
But
out.
Amazon wants to build its own AI chips, right? And eventually maybe not buy as many NVIDIA chips. So it's interesting to see that kind of push and pull. And the other thing here, Maddie, that just fascinates me about this story is kind of the classic investor story of how a company grows as they give you a product, right? So NVIDIA has built these very successful AI chips. Everyone wants them. How does NVIDIA follow the customer through that journey, right? You think about Apple and iPhone, right? Apple gave us all of these great products. What did they eventually build out that's now one of the largest parts of their business, the services business, right? NVIDIA's AI chips are a lot more complicated and a lot more B2B and a little bit different than that. But to me, I think it's a fair comparison to think about, okay, everyone bought our chips. How do we become a part of the next version of AI? We were talking earlier last hour about how there's sort of this shift from the infrastructure to what do we do with this? Cloud services is a huge, huge part of that next step. If NVIDIA can actually eventually generate $150 billion in revenue off of this, then you start to talk about, okay, maybe AI chip demand isn't the entire part of the investor story, because I think for the large part of the last 18 months, it's been, well, what about when everyone has enough chips, right? And that's all the discussion's been. Maybe the discussion starts to shift a little bit if we continue to hear more about this on coming earnings calls.